Check 1, 2. Dude, Red Beast 85. I don't know where he is, but I gotta say something to him. Hell yeah, buddy. How you doing? Test 1, 2. Check 1, 2. Check microphone checker. We've got the Jerome Powell. Uh-oh, we're going up right now? LOL. Every email in my inbox last night was crash this morning. They told me sell the news. That's what they tried telling me. My answer to that was from where? Where do I sell the news? Where's the correction from? What is 2 or 3% correction? From where, when, how? I mean, anybody can say that, right? It's like probability and statistics. Just tell them one part of it, but not the other. I mean, you can't win. Not only can you not only do you manipulate probability and statistics, but then you give answers that are like expect a 2 to 3% correction. Yes, but from where? And if it grows larger, that's fine, I guess. But from where and when and how do you execute that? You know, these are people with tens and hundreds of thousands of followers, and they're able to get away with mixed messaging, you know, obscurity and outs and all of that kind of stuff, and never how, when, and, you know, it's almost breaking of rules. This is why you need rules as a trader, as a retailer. This is why you put your blinders on, because they don't give you the full information ever. It's almost like it's just built in that, you know, you consume this stuff because, you know, this is almost like charging money for membership in a Discord. It's not all of it. Some of it is bots and scammers and do-gooders and blah, 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 that don't care. But there's something in the psychology of the man and woman and they and them out there that say it's, if you don't qualify that voice with money, or they've got millions of followers, or they've got I don't know, they publish a newspaper the whole world reads, somehow they're valid, their take. And it's the ruin of traders. You should be always sticking with your rules, especially on binary events, and even afterwards. You know, you just stick with your rules. You'll find that most events, data, it'll all come together at that point, because when you stop looking at that stuff, you trade so much better. So much easier to trade what is in front of you, and not what you're filled with, that is meant to elicit fear, emotion, insecurities, or FOMO, or, you know, whatever. FOMO bad, FOMO good, it doesn't really matter. And this is where most retail traders fail, is that they don't have fucking rules. I can say the F word right now. YouTube said yes on that. I can say it whenever I want. I don't have to wait 5 seconds or anything like that. I don't know what's going on with my camera over here either. The camera's all messed up. Probably need to redo that thing. But, you know, I got to say something to you. When you are faced with uncertainty, you always fall back on your rules at every chance that you get, and it'll make life easier for you. So last night I was reading my emails, and I get emails from everybody, you know, like the Spot Gamma. Not this isn't them particularly, but I get emails from like everybody, and I meet people on Twitter. They're like, "Hey man, let me get you the newsletter and all that kind of stuff." And I normally stay away from YouTube these days too. Like I don't watch YouTube programs at nighttime any longer. I've stopped that years ago because it would influence my own thesis, right? And poison me almost. Led to fears, doubts, insecurities, you name it, with whatever I was thinking. At first, I liked it because I wanted other opinions, but then after time, it was poisoning me. And I found that I see that everywhere, whether it's Bloomberg or it could be Bloomberg, CNBC, it doesn't matter. Data, could be data. And I've only become a better trader following fucking rules. And I'm serious here. And if it doesn't meet my rules, I don't take the trade. And I get left behind sometimes. Now, this morning, I'm flat at the moment. If you want to know where I'm at with the market right now, I'm flat. We're going to go through a pre-FOMC today because that same fucking poison is at max everywhere right now. And I have a thumbnail on the YouTube video showing it. And we'll get into it. We'll try to get into, or not try to, it's 10 a.m. So we're going to get into it between now and 2:30 this afternoon and try to wade through some of it with me if you can. But I want to start with something here, which is the White House and Bessent and Trump and all his other cabinet position holders. They have successfully, in my view, successfully at this point, convinced the market of two things. One, that a cut is required, and that the Fed is behind the curve, and that not cutting. I want to go on record about this, that the Fed not cutting. And, well, first off, I want to go on record saying that I disagree that the Fed is behind the curve. Number two, the Fed not cutting at this FOMC rate decision meeting or today is bad in some way because it's hurting the economy. And I disagree with that too. In fact, we've seemed to have forgotten that the White House wants cuts for policy. And the greater participants either are believing this and drinking this, or they realize this and are still pushing this because they have their Main Street hat on. And they want that policy passed regardless. Now, what has come out of that is a multitude of misinformation. The first one being that when we get cuts that we do not correct. And I showed you, or first off, I posted on Twitter a week or two ago that is in fact false. I want to show you that tweet really quick. I reposted it from a guy that tracks data on rate cuts. And the first thing I'm going to show you is this guy right here. And just so you can see what this guy is saying, and we're going to look at, and his point was that every time we've cut, we get a correction of some kind. And the zeitgeist right now has been that, in fact, we won't roll at all, ever, from this. And that is just historically not true. Historically not true. So I'm going to show you his chart here in just a moment. I hope, if I have it. And I'm going to show you this guy's chart where he shows that, in fact, the market does correct. We do like a half correction most times. If there is cloudiness on if we're in a cutting regime or if it's a one-off cut, we'll do like a unrealized volatility check, back test on the market. And if we are in fact in a cutting regime, if the language is cloudy, we can recover. But if we do slide into a cutting regime without the Fed telling you, we will continue that correction. I'm just even going to pull this up for you right now. I said I'm going to pull this up for you, but I don't see it right now. I thought I had it right in front of me here a moment ago. Just one more moment here. Right here. I'm going to bring this up for you really quick. We're going to switch over. And this is Cycle's Edge. Now, I reposted this on August 31st here. And Cycle's Edge, I don't know that they have a lot of followers. I don't think this guy does. But I liked him. I never followed him. I should have followed him. I'm going to follow him right now. At Cycle's Edge LLC. And he wrote, rate cuts are coming next month. Remember, when they happen outside of recessions, it tends to be a tailwind for risk assets. Now let's look at this closer here. What I want to show you here is, I don't know if you can see this. Let me see if I can mute my camera. I'm in here. Let me get my camera. Okay, there we go. Move this down for, oh, wait a minute. That was wrong. Come on now, slide that down there. He makes the case that rate cuts are coming next month. Remember, when they happen outside of recessions, it tends to be a tailwind for risk assets. And his point here is that when you get these cuts, you're either cutting down into a recession right here. But in this case, we were not in a recession. We took a cut here in 1980. We went up. When we made our second cut, we were heading into a recession over here. So that was actually bad for markets. When we cut right here, we exploded to the upside. Right here. When we cut here, we exploded to the upside, but then had a pullback. And then over here in the mid-1990s, we started cutting and we went up. There was a small pullback in here. And then this, of course, was the recession in 2001, 2002. This was the recession in 2008. Can I bring this over a little bit? I don't think I can bring this over a little bit more. But this is the quote-unquote black swan, minus 35% inside of excuse me here. This is the, I think this is the COVID one, or this one is the COVID one over here, but I believe that's COVID up in here. And there was one just before. We got some more cuts right over here. So the question from this guy becomes, will we roll or will we not roll? So we're going to look this morning at, let me close that up there, go back to the main screen or trigger screen. Well, the question this morning is going to become, do we roll or not? Are we cutting into a recession or not? And the greater question from outside of that is, what did Jerome actually say versus what is the White House saying? What is the hyperbole saying? What is the zeitgeist saying? What is the street saying? And why are they saying it? Now, from President Trump, he's telling you and I, and the White House is telling you and I, we need a cut. Why? Because the Fed is behind the curve, right? We have deteriorating economic conditions. We know that's not true, though. We know that economic conditions are slowing. The intent of rate hikes is that, but we're not behind the curve on the hard data. We also know that the White House wants cuts for policy, to pass policy. So in kind, what's happened is we've kind of like manipulated what's reality and what's not reality. And traders, retail traders in particular, seem to think that we are behind the curve with low information in their lives, basically, right? And at Jackson's Hole in particular, Jerome Powell was clear as day, that the market may be ready for a cut. But he was clear as day that we were not heading into a cutting cycle. That's important. Now, since then, the market has tried to say that Jerome is heading into a cutting cycle. They've even said publicly that he has stated at Jackson's Hole that he was heading into a cutting cycle. I'm going to read to you in a minute here the exact verbiage of what was said at Jackson's Hole, and that was not included. They're very cautious of what they say. These Fed chairs, the little chairs, big president, they're very careful in what they say. You'll notice sometimes that the Fed governors will speak out of both sides of their mouths to CYA. And then you'll also notice that when Jerome actually speaks at a press conference, he follows the script mostly. And when even when he does not follow the script, what does he do? He is already prepared for most of the questions that he has to face. It's almost like he sets them up. There was a FOMC meeting recently where a reporter asked him a question, and he comically said, "Oh, I just happened to be prepared for that one today." And he pulled out a sheet of paper to answer the reporter's question, almost as if the question was planted. And then that kind of proves that when Jerome is speaking, you want to listen closely to the verbiage that he uses and then any changes to that verbiage. And there has been no change from that verbiage into today. We have to acknowledge that that is the reality. Further, the 30-year note is saying that we're not getting cuts later this year. We have a cut or two today expected and priced into the market, but no further cuts like the zeitgeist and the political machine is telling you. So it's very cloudy right now, in my view, what the zeitgeist is, what the newspapers are telling you, what CNBC, what your local Furu is telling you, what your local social media is telling you. It's almost everything is the direct opposite of what the accepted opinion is here. Now, this guy, Cycle Z, just saying, a rate cut not heading into a recession can be good for markets. And we said to you yesterday that you'll also hear after today's event, you'll likely hear people saying, well, we're cutting, no matter what the language is, that we're going into a rate cutting cycle. We had one last September. We have one this September. That sounds and smells, walks and talks and flies like a duck. And they're going to push that narrative on you for that rate cycle to continue, but not because of a recession, but more to pass policy, which is like the not talk. We don't want to talk about this issue here. That it has nothing to do with hard data in the economy at this point, especially the idea of a rate cut cycle, and not just a one-off. So I'm also going to show you this morning what happens when we cut rates in the market. We're going to go back in history. I could only find one period, I think it was 1967, where cutting rates did not result in an immediate correction of some kind. Think of it like unrealized and realized volatility. About 99% of the time, we end up rolling. Now, from there, the question becomes, when do we roll? When does it start? What does it look like when we begin to roll, and how to prepare for it if it does begin to roll? And usually we'll see it right now. It's within a day or two after today. We're either going to begin floating up into the end of the month, or we're going to begin to float down into the end of the month. Literally, after today, you should see it's simple. Higher lows or lower lows. It's that simple. So we'll get into that this morning as well. I think I got all that out, right? Yeah. So let's get started here with SPY this morning. We're going to start with, so this is SPY. We're going to start with a 4-hour chart here. We're going to look at support. And the one thing we need to know on this run in particular is kind of high, isn't it? Look at that. Woo. Way up there, right? Nice, juicy drop. If you had to decide between Are we going up to $700-800? Or are we going down to the daily trigger? Which looks juicier to you? Let me put it another way. If you were looking to make profit, does that look juicier to you? Or does that look juicier to you? Let's keep it really simple here. This looks pretty juicy, doesn't it? We kind of only need to lose support, don't we? Forget this one right here. Just this one right here. This is our, what? Poop mountain, isn't it? You see our poop mountain right here? You guys know what poop mountain is, right? Start to build the poop mountain, right? Try to get higher, right? Try to get up there. And whenever we lose poop mountain, it's usually pretty bad, right? It's our jump point, and it's also our, get out of the way to the downside. Now let's look first at our 4-hour candle here. We got this low in here. This candle right here, we're starting to take this one out. Do you notice that there? And not only that, we've got this flat in here. Not quite enough yet, but almost there. So we're going to put this white line right here. Let's look at a daily candle on that white line. You can already see the erasing here. Do you see the erasing of this one? Look at this candle right here. Do you see this wick? See that one right there? We've erased all these candles, haven't we? All these candles have been erased. That would say to me that there's a fair chance that not only is support lost here, but that we can sweep and trade all of this down here. All of this can be traded. And in particular, this right here. Leave that one right there. And there we can start getting some big drops, right? 657. Big drop there, right? Air gap right here. Air gap down here. Whole bunch of gaps down here, isn't there? A lot of juice. Kind of look at this just like this. We start sweeping these doors open. And it's like, whoom, drop right there. Right? All of a sudden you're down here. Bam. You know, it's not too long before we're erasing candles, is it? All the way down. So do we look for this at the moment? No, not yet. Doors open, but we're not there yet, are we? Not quite there. We're going to go back to Poop Island over here. We know where it is. We want to look at a few things. We've got, there's Friday, there's Thursday right here. Here's Thursday. Thursday right in here. Here's Thursday, 8 a.m., 9 a.m. Just snap one more right here. Right in there. Right in here. Right about there. Put that 4-hour right here. $6.55. There ain't nothing down here, is there? Nothing down here. Not a thing. And more importantly, this 4-hour is more important right here. We want to watch this one very closely. Right now, we're just pushing price right now. That's all we're doing. Right there. And we've got a sell signal above. We're going to look at the 1 hour here. Price is underneath the daily trigger currently. As we push price, this one right in there. Put that one there. You can already see that this one's kind of weak. A lot of sellers in here, right? 1, 2, 3. You got one more sell signal here. Hold on here. That's a yellow 2. The real one is right here. This is what we need to get above. We need to get above 660 right here. I want to accumulate right there. This is a place to accumulate right where we are. Next thing we're going to look at here is velocity. Weekly looks good for a close on Friday. But the daily is already rolling over. This is not good here. Do you see that? It's not good. So daily closes are on the decline for being negative. On a 30-minute basis, 15 looks fine. Half an hour looks like crap. And this is what I want to see right here. Right here. This is negative. This is your intraday SPX right here. Intraday SPX is going negative on the 30-minute hourly velocity. This is showing weakness down here, isn't it? See that right there? You really want to be buying dips only after seeing higher lows on 30-minute hourly velo. And we got a little bit of a close here that's negative on the 30-minute daily velocity right there. That's showing negative 2. So there is a setup here for downside. Looking kind of weak on velocity here in SPY. Check here. Let me get this one up here. Pivot point intraday positive gamma is above 660.34. Not there right now, are we? Let's go to a 15-minute. Let's go to a 5-minute. That's all negative right there. Got a little bit of a gap down below here. Remember all of these guys over here Thursday, Friday? So this is all Thursday here, 8 a.m., 9:30. Right here, push. Here, push. You know, you start sweeping these lows down here, whoop, and that's going to show you that there's no support over here. As of right now, though, they stepped in, they bought up here, they bought here, they bought here. On Wednesday morning, this is Tuesday, they bought this. So they're still here. The bigger danger here would be sweeping this low. Start rejecting up here. And we have a cross of the half-an-hour trigger. Not quite there yet, but it's there. You see it? The hourly is turning down. Half hour not there yet. It was looking kind of bullish, but you know, swoop down is definitely possible in another half an hour or two. And I think we brought this up yesterday, 657. This very key level right here, the 657.60. We were looking to catch this yesterday, right? 657, you remember this? We were like, man, can we get down to 657, 658 Ps? We were running those yesterday, right? The rest of the day, trying to hammer down and get down here. Try to catch a bounce back higher. Didn't let that didn't happen yesterday. So this is probably available today. That's where the setup is for the roll. If we're going to roll down today, it's in here. We were unable to get down there yesterday. This is Wednesday at 4 o'clock. They tried it here. See the demand is still there? See it right there? Demand here, but this is open now. That opens the door to the next one down here. So down in here somewhere. This is only S2. S3 and S4. And I too agree that let's go look at this closer here. Hold on. There's that sweep. This is Thursday right here of last week. You want to watch closely this zone right here. This is 653.73. This is S4 and S5. This is a 2 sigma move. If you don't know what that is, an intraday 2 sigma move. The reason this is down here is because if we lose this, if we sweep this here, then we can go to there and be fine. That's good. But if we go like this, whoop, just that little pierce right there, that opens a big door to downside. If you see something like that today, like blast it down, anything like that there, you're a seller. So just mark this on your charts at home. 653.73, and I would even posit that losing just this $658. 0.93, bad for bulls. BLLS. So you want to be buying dips here. Do not want to be buying dips here if it's constructive. You know the rules, right? Blast down here, blast down here. That's fine. And then we're looking to buy a dip here. The usual stuff, right? Prior high or prior low, marked bottom, new high, right? Get up here, new high, hourly trigger. Sorry about that. Hold on. Like that. Kind of Johnny on the spot, putting some risk on in here, right? Crank all that up. So you're not quite buying a dip yet. And you are watching this. You're watching these white lines in particular. In particular, watching these white lines. These ones right here. These ones right here. And we start staircasing down. So losing just 658.93. In my view, this is kind of it for the bulls, at least today. You might get a little bit of price action where at 2:30 you could see some whipsawing to the downside, but pay particularly close attention this morning to things like unlocking that. That's no bueno. Right, come right back down here. Bing, there's your first target right there. And then we're just like down cascading. So pay very close attention to this one right here. This white line in particular. This is where the buyers, this is where we think the buyers are, right about here. And the moment you go through these guys, it's telling you that they're not there today. They're not there. Start going, not right now, but they're not, I mean, they're still there, but you start seeing this in cash market and you start, whoop, something like that. I'd be kind of concerned. We're not there yet. Be too weirded out here. You trust me, you'll see it. You can see it already from this morning. That one is open. Not guaranteed that we go down here. That's what it's looking like, isn't it? And that's actually okay if we go here, but not there. And you start seeing stuff like this. They break through this right here, right? Start breaking through there. And if you get through that and down there, that's no bueno, right? No bueno. Now you have some good news here. You have good news. This is SPX Gamma. This is SPX Net Gamma as of today. Let me go flip over here. Let's see where we're parked right now. Parked right on by the dip. Right here. This is 6,600. We're going to look at where that is. It's right here. See right here? This over here, but this is technically probably the gamma flips right here, but in truth, it's like neutral gamma. But in truth, the gamma flip is at 65.05. Strike level volatility is at max today. And then it's expected to fall off, but if we get something like a hawkish cut or a no cut pause, the knee jerk could send this one way up again. This is expected to come down, but you get like, oh my God, we're breaking, vols low into the gamma flip at 65.05, but this could crank right back up again, right? This is only as good as the information we have. Let's just switch over here really quick. 65.05. Make sure I got that right. Net gamma 65.05, not 65.05. It's way down here, isn't it? There's no gamma support in here anymore. This is gone. That's gone. Gamma flip at 65.05. That's a couple pennies higher. This also happens to be what? This is Wednesday. This is Thursday. And I kind of told you here that, you might have one more under here, but in reality, you don't. And in reality, there's a giant gap down here. And I wanted you to know that between here and here, you have something going for you as a bull. And that is what? A supportive market, right? If you blood down here, you're going to see dealers buy, right? If you blast down here, dealers are forced to buy, aren't they? Right? And today we have volatility, right? Max vol today, basically, right? Let up into max vol. So any bad news, you would expect to move down here. This is 65.05. If I were trying to buy a dip today, I would first be looking for this area here to buy a dip, right? And if we begin to trade underneath it, it's a 30-minute, let's go to an hour. Let's check the hour here. I wouldn't trust any of this. Wouldn't trust any of these levels here. None of them. I would only trust this gamma flip down below. So we're kind of buying this right here, aren't we? We've got this Friday right here, 15:30. You could get this theoretically. You could say that these buyers here are still here. But in truth, if we're going up, we're trying to trade all this here. We're trying to trade all this up here, right? Smash, smash, smash. Smash, whatever that is. Kind of want to be higher, don't you? Kind of want to be above the half-hour trigger, right? Johnny on the spot. That's 66.06. This green one right here. Let's go back and look at this. 6,600, 66.25, 66.50. Kind of want to be higher, don't we? Kind of want to be higher. We're underneath the half-hour trigger, which is flattening. Kind of want to be up here, don't we? I don't want to be buying dips somewhere in here. Following our rules, right? Get that nice little high. Attack that. Squeeze them out. So make a little mark on your... Make a little mark. You got 6,600 here. Let's make sure I got this right here. Let's check this really quick. I had it right, I thought. We're underneath this 6,600 now. Do you see that? Underneath it. Longs above, right? Long above that green line right there. No longs in here. Theoretically, I'd be willing to take a long if we bounced. They bounced over here. Made a new high. I'd consider one in here. Consider it. But in truth, I'd really like that one. It's the one I want to buy. That long above. 66.06 Just check that one more time. $66.25. Way up here. Look at that. Woo. Right about there. That's better. Intraday gamma support long above the green arrow, right? The green line. Or where am I long next? We'll look at this one here, but in truth, we can leave that one there. Let's look at this one really quick. 66. This is 6,600. We've got 65.75, 65.50, but these are nothing here. These are signposts. 65.75. Come on. $65.75, $65.55, $65.25. What does this look like to you? This looks like the cup and handle, doesn't it? Slam. Well, I guess you'd need this one here. And then slam, right, for continuation. Or even just some fear in the middle of the day. Right, if we sweep this right here, but don't make the new low, expect dealers to step in and buy. Right, you then expect the break up here and then up, and away, right? Down there. So if I'm a buyer today, where am I a buyer? Interested in longs here. Right that right. Let me get rid of that. I got my caps on. Make that green. Then I'm also interested in longs above. Interested in longs above here. Put that over there. If a low Hold on here. If low is made below 65.05, and a new low is put in, I turn bear. Make sense? Fairly easy, right? You don't need to worry about all this stuff up here just yet, but just right here. Let's look at just this right here. Put this inside the Discord for people. And I would also note here that all right, so must use rules, marked bottom, etc. Does that make sense to all of you right there? You guys understand? You guys all get this? You guys all understanding this in the Discord? Just say yes. Is that understood? Don't be too freaky yet. I'm going to show you guys one more thing here. Don't be freaking out here. As of right now, we're pressing. You know, think of this as stretching price right now. There's no collapse here. Don't get all freaked out just yet. All you're looking for is, you don't care about this here. Well, if you were looking for that downside move too, I'm looking for this here, this break, and this new low. Same thing. Still supportive though. Thursday, Friday's holding. Right? There's a little bit of a gap down here that needs closed. We can lose that. We know about that to the downside. But for right now, we're just stretching. That's it. That's all we're doing. Don't get too crazy yet. Next thing we're going to look at is what else do we need to know for this morning. For SPX, we've got net gamma. We're going to look at a couple things here. This is one-day net gamma. Write these down at home. We've got 65.90, 6,600. That's where we are, right? We got puts right here, put gamma right here. On the upside, we've got call gamma at 6,620, all the way up to 6,700. 6,700. Look at that. This is the bottom. 65.90, 6,600. Then we've got 6,620 and 6,700. This is one date gamma. Where are we at right now? Where are we at? Right here, right? We're right in here, aren't we? There's a little bit down here to 90. This is the daily or the hourly trigger. This is your safe space, right? Oh yeah, a little bit of that down there and then crank. This is your intraday one date gamma. This is our market right now. So you would need to lose the hourly trigger on SPY, or excuse me, SPX to lose this market. So people are getting long here. You understand? Let's go look at it again. This is 6590. This is 6600. Go back to SPX. Let's show you where that is. 6590. See this right in here. This is where all the put gamma is for today. This is where all the call gamma, put gamma. So if you were to see the 1-date put gamma flip today, you'd want to see a break here and a new low, right? And a ramp of put buying. But we don't have that yet, do we? There's no trigger for it, is there? Let's look at what's coming into the market right now. Let's do 2-date volume. All over the place, isn't it? Pretty wild, right? 6,300. Whew. Over here, 64.95, 6,500. This makes sense to me. This is the 6,500 I showed you. On the upside today, we've got 66.50, 66.70, and then we go down to like 68, 67, and then there's something else over here, 68.75. Now, I normally will disclude these two. This one here, I exit out. And that kind of gives us what? What does this one give us? Are we going to go there? No. It kind of ties us into right here and right about there. Kind of trapped in here, aren't we? For now, at least. With the call and put flow that's coming in. So if that's the case, 6,500, 64.95, and then up here, this is 66.50. A little bit more over here, you could say 66.70 if you wanted. How does that translate? Right here, right? They're saying to you is up, right? Attempt to buy a dip in here, or we get that bad news. We're going down here, aren't we? This is highly probable today. So I would set an alert. I would set an alert on SPX, snap a line. You know, add an alert on 60, crossing down, price crossing down, create on 65.90. And I would set another alert down here. This will let you know before we get there if you want to buy a dip or not, but set another alert down here. Add an alert, horizontal line, price crossing down. Have that right? Crossing down. Once per minute, create. So we got an alert down here. You can pay attention. I probably already will be. And then this one right here. Let me just check this alert really quick. Edit alert, not once. Once per minute. It's good. We're going to set another one over here on 660250. Add an alert right here, crossing up. Once per minute, create. Sweet. So we got some alerts set here. We know if we can buy a dip above this. We know if we're going to know if we trade above this, we'll know that we'll look to buy a dip. We'll also know if we cross down this, does it become constructive to buy a dip? We also know if we lose this and start to reject it, we can get some puts, right? And try to take that bad boy down. Make sense? Fairly easy, right? Not too hard. Alert here, and alert here on SPX Gamma. Next thing we need to know today is what? Let's look at SPX. We've got SPY. If you want those numbers, I'll give you these. Hold on here. 1 date Gamma on SPY. 659, 661, 664. Downside, 655, 652. Then there's an anchor down here, 640. I'm not really concerned about that. This is more to tie in, to rein in upside moves. You know why that is? Because they've been selling 6,700, right? Option sellers do not want us trading above 6,700. And that's likely going to be the mantra today, tomorrow, and into end of month, in my view. In my view, we go up today and we do not crash today. So I'm just looking for two places here to buy a dip. I got one right here. Two places to buy a dip, to go up, and to go up. In between, if we begin to roll down, I'll look for some puts, right? Then I'll close my puts. No, I don't care about the FOMO down here. If we begin to turn up again, I'll get some calls, and we'll go up again, right? Woohoo! Close those out here. Hopefully we can get back in above on this interested in calls again. Make sense? Fairly easy. Okay, oh, one more thing. Just check this really quick. Just check vol control. Vol control, this is when they're here. Yeah, they're still here, baby. That's good to see. So we know that vol control gang will try to stop volatility today. Seasonality, not looking good. Look at that, baby. Woo. But look at that too, right? Whew. A little bit of a divergence here, right? Let's look at this one here. Yeah, this one, this one looking for a roll here, isn't it? This is NDX, by the way. Let's check volatility. VIX seasonality. That's not pretty, is it? Showing on track for vol. That ain't good, is it? So even if we get, let's go back to the trigger screen. Let's go to an hour. Even if we get this upside move today, mute all that. Get rid of this. Get rid of that. We'll come back to this in a minute. Even if we get this upside move, that's really what you need to see right there. Oh, look, we didn't lose it. Shocker. And this right here is your your 65.90 right about here. So this 65.90, if you wanted to see intraday gamma and flows switch to sell side, like 2-to-8 calls, puts, you would need to see this be lost right here. So a key level here is 658.25, 657.60, and 657.41. If you see at any point today like blood, shanking right here, if you're long, start slamming that put button because they're going to come in. You start hitting that white line right there, and you're going to see put flows. And you need to be Johnny on the spot here. At a minimum, you need to close your longs. At the maximum, you're slamming your close button to lick your wounds. And you're also slamming that put button, right? Now, for the rest of you, you may want to sit this out, right? You could also sit down here, couldn't you? And this would be, let me just check this, make sure it's right. Wednesday, 6:30. Wednesday. Where's Wednesday? Have that right? Hold on. Let me just check this. 2:30 in the afternoon. Right in here. $12:30. Wednesday, 12:30. Right in there. $12:30. Right about here, I think. Let me check this really quick. Right about here. That's the gamma flip right there. Let's get rid of that. Here's your 2 sigma move. And what this is telling us is if we go down here, right, hit that gamma flip, whew, spicy time. We're going to deal with that just yet. Losing this bad. Bad for the Bulls, right here. We've got 12 o'clock. We've got 16. Oh, there we go. We're slapping that horizontal line right now. Get an alert right now. Go back to an hour. Two o'clock. Move that to 2:30. We got 2 o'clock and we got 2:30 right here. No, I want that to be yellow and a 2. $2:30. Go to a 1 minute. This is 12 o'clock. This is 10 a.m. See what they were doing at 10. They were selling, I'm assuming. Yeah, so they're selling at 10. This is 12 p.m. I got this one right here going there. And then down, we can go where? How far can we go? We can go right about there. I don't necessarily have to go that deep, but right about there. About there. We'll lower this one down there. 4 right here. About there. See this right here? Like this drop, drop, drop. We're about there. Losing this bad. There's S2 right there. See S2. Support level 2, support level 1. This is all 1 sigma move stuff for the day. This hourly trigger is going to matter. And get positive news there. Right up there. Here, I'll make this larger for you so you can see it. None of this is required. It's in dotted line. Don't pay any of those options. And then we go up here. We're about there. Worst case scenario, right about there. I don't know what happened there, but it's not matching up. Let's get rid of that. Back there. Right about there. Let's check something here. Well, it'd be a buyer right there. I'd also like to be a buyer above. So if you can crank up here, smash up there. Maybe not that low, but somewhere in here. Pivot point, we know where that is. We know where that one is. We know where this one is in here. And we know that anything like that's going to come back. Get rid of that. And this could happen before over there. So just any kind of pushback on that. I can leave that over there. I'll just leave it over here for now because of the spacing, but back to 1 minute here. I would need to go up there a little bit higher. So actually go almost to there, wouldn't it? Nope. I would smash into that. We would need to be up here somewhere. Leave it over here in case we get there during the speech. Okay. So a few notes here. If we're able to squeeze up above, you want to be a buyer on any back test right here. Any squeezing above, buyer. If we fade this into 2 p.m., let's say we go up here, start fading down into like 2. I want to be a buyer above this. Well, this is kind of janky because of the release and the presser. This could all happen inside of this time period here and into the close. We'll just leave that over here for now. Pretend we're following it on the side. Just check here. If we blast down here, start slamming that put button. Remember, you got to wait for the new low. Your targets down there would be 652. You can even open your brokerage up and just set up like a, from 657, set up like a 650, 654. And you can clean up on 652 over here. For upside targets into the bell, if we go up, $660 is nice to print 662. 62.5 would be nice too up here. This is only R2. And after tomorrow, you would be looking for a big move. This is actually 665 way up here. This is sell the news too, but I don't think you get that today. I think you get this tomorrow. I think if you go up here, you're going to, if we go up today, you're going to see something like this into the bell. Wake up tomorrow, above and down. You're going to go sideways, and it's going to ramp up into the close tomorrow. So they can murder all this shit in here. They can murder you all day long, and then up. I don't think you're going to do a straight shot up here. Maybe it's possible, but I wouldn't count on it. And just so you know, if you want to know what I think happens today, my personal thought of what I think happens today, it's going to be something like this. Something like this. Maybe fade this out, but my thesis is up into Friday open. I think we dumped the market on DivX. I think they print that. I think if we get a good day today, but this is my thesis, up. And I'm looking to buy dips as deep as I can get them. And unless we start breaking down, I'm not even considering sell side. I would need to see like the breakdown, new low, Johnny on the spot. But even so, anything productive. So if I go down here and I get a new high, high low, marked bottom, new high, above the daily trigger, bam, 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 bam. You know what to do, right? So we're not ready yet for me to buy a dip. I'm not ready to buy a dip here yet. You could potentially do one in here for a little bit, but I think it's dangerous. I think the better trade is to let this squeeze up, take these highs out, come back down, have that support of the daily trigger, and try to catch that next move up and away. I think that's the safest trade. Or we go up here, fade it down, make a new high and a low, and you're Johnny on the spot right here. So you're Johnny on the spot here, Johnny on the spot here. You're out again once we hit this. And then you're looking again on this daily trigger. Whammo, buying again. Buyer there, 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 there. I don't know if you can tell, but that's what it is, for me at least. You could trade this if you wanted right here. You can trade that. I just don't think you can get above it until you get a trigger of good news from the Fed. I don't think you're getting out of here. I don't think you are. But if we do, we start like racing up, they start blasting us up. You know, we'll party right there if we can. But we're not there, so just hang out, do nothing. Remember that hourly velocity is negative right now. So this is very viable here today, down all the way down here. I drew it out with crayons for you. $11:00. 11:30. And look at that. And there's the sellers right there. They're right here. You can see them. Hourly trigger coming into it. FOMO gang right here. That means you're getting out right here. I'll bring that into relief so you can see the cup. Let me check one more time frame here. Yeah, these guys are already in here, right here. You see that right there? So they're right there. We're already there right now. We're already kind of in the place right here. So you can see it. Four-hour holding up nicely. No cash market downside yet. Here's your SPX gamma down here for the day. Interested in long calls above where we are. We already know we probably can't get out right now. We're going to need positive gamma to escape this more than likely. Or, excuse me, a positive catalyst to escape this. So not quite interested yet in buying calls. I'll leave this right here for you. Right there. Okay. We did the gamma thing. I want to show you two things here. This one guy said that not cutting into a recession bodes well for stocks. We also know if that you're short that you're going to argue that we're in a cutting cycle and that's because we're heading into a recession. All right, we already know that if you're positioned for, hey, we blast down, that they're going to run with that narrative, right? It's been a big narrative. We know the White House needs policy passed and to be in a cutting cycle. Historically, it's not so bad. Maybe a little bit. If we're not heading into a recession, which the data does not support, we're slowing in growth. So if we were in growth going up like this, we're now like that. We're not like this. We're not like that. We're like this. If we were like that, we're like this. So we know we're not cutting into a recession. We know the zeitgeist is different. This guy that showed this earlier said, yeah, you might have a drawdown, but it should be limited. And so the big thesis here is let's front run it. It's sell the news today. Not only is it sell the news, it's a 2.5% to 3% correction. My question, of course, is always where? Where is that 2 or 3% correction? Why are you asking for that 3%, 2% correction? I would assume that you're asking for it for a multitude of reasons. You want to get 2 or 3% into the end of the quarter so that you can get some bearish sentiment. Turn 2 or 3% into 5, 10. Seriously. You got to think about, like, why do they want it today? Why today? I'm going to show you why. Because when you go down 2 or 3%, hold on here, I got to clean this. Hold on a second here. Give me one quick second. Fucking blind as a bat over here. Super blind as a bat. Hold on one second here. I got to clean my glasses here. Hold on. I'm going to run them through the dishwasher. Hold on. Over here cleaning my glasses while I'm on camera. I'm clean as hell right now, too. They're just dirty glasses. a day or two old without cleaning them. I try to clean these things twice, 3 times a day, and I don't think that I clean them. Oh, yeah, so much better. Woo! I'm back, baby. So they're saying 2 or 3%, right? And you get away with it. Like, here, I'm going to write you a letter. It's 2 or 3% down. But from where? That matters. So we're going to look at something important here. We're going to start here. Let's look at why they're saying this. Let's delete all this crap right now. We kind of have to leave this up. But more importantly, let me show you this chart right here. Why are they saying this to you? Well, we're in the 16th, 17th of the third month of a quarter. What tends to happen in this time period right here is we have some kind of a watershed moment where we start to fade down into the 30th, to the end of the month, or we begin to fade up. Or not fade, but rise up and then down into up into the 31st or the end of the month, and then down afterwards. And this is kind of big, right? Big thing right here. Let me show you some of the some prior months like this. So there's September. And you see this zone right here. This is the 16th, 17th of August. We faded down into early month. A little bit of a rise up here, but down again, right? Into the end of the month, right? This is down, down. Let's look at another one over here. This is June, right? Or July, excuse me. This is about the 16th right here. See it right here? So they're taking their shot at you, wham, but we get a new high. So this is the 16th of August. And unlike doing this thing down here, right, in the month end, we went up. So up, down, right? Up, down. Very important, right? So watershed moments in the market, right? Let's look at another one over here. Hold on. This is July. We can look at these back any month you want, any quarter that you want. Here's another watershed moment right here. Here's the 10th, 11th, 12th, 13th, 14th, 16th, 17th, 18th, 20th. Bloodbath, right? Boom. Stay in trend up. 15th, 16th, all the way down, right? And you can look back on any year. You can look back on 2023, 2024. So my greater point here is what? What's my greater point here? Here's end of month. Here's VU. Excuse me, this is end of month over here. This is the day prior to VIXpiration, right? Front running VIX. This is the actual FOMC and VIXpiration. Let me get the DivX over here, right? I think over here. 19th, excuse me. On Friday. So if you're a trader and you're looking at today, this is a normal chart, right? Just a bunch of lines, no indicators, just trend. You want to see it? The best place to buy the dip is where? Here, here, here. Pretty good, right? You're a rocket scientist. Probably smiling, right? Hell yeah, a little bit of patience here. Goes up, goes up, goes up. Not bad, right? So the patient trader would what? He wouldn't care too much about this, would he? Patient trader will do what? He'd wait till we're down here, right? So this would mean that you have a binary event. All right? You'd be waiting down here like a smart trader. We're waiting down here, bro. This worked every time back there. And if you look at history from the 15th, 16th expiration and forward, we're like, oh, Cap, what about up here, man? Well, we know that after these expirations, FOMCs, these watershed moments, if we were to, let's say we squeeze up today, wham! Like this, right? Watch this closer. So we have these watershed moments. You'd either be waiting down there after the event, right? Buy a dip. Or you could even let this whole day go. Even crank up here. It wouldn't matter, would it? More than likely be able to buy a dip all the way up into this end of month, right? We're either going to go down or we're going to go up. So you really don't even have to put any what on? Risk today. You could let this whole day play out, bashes up here. Oh, yeah, I didn't get to make all that money. Wait for a pullback, get that hourly trigger going. You're just buying dips the whole way into the end of the quarter. Right? We're not going to go above 670. This is your zone to trade. We're going up, buying dips, buying dips. If the day goes against you here, you're down here. Day goes with you here, and then joining in later. So this binary event for most traders is what? Put my camera on over here, sorry. What is this event for most people? 70% of you. So stand in the room and look at each other and think 7 out of the 10 of the guys here chatting right now are wrong. Likely even higher. Could be as high as 98% of you. Or 90. Is that a percent? A lot. Now you might be looking around and saying to yourself, that's not me. I'm a kick-ass trader. I would say to you, why not just wait until after today? Trade that, get a discount, trade that. I would say that most of you could probably choose to sit out today and just chair. Why is that? It's because if we go down, there's always going to be somebody on social media. I'm going to say I called it. Haha. They'll be in that chat. They'll be on the chat on all these other fucking places I stream, right? In the Discord. I knew it, we were going down. And you're the guy consuming that going, oh, fuck me, man. I should have just followed that guy. If we go up, that guy's going to disappear. And a different guy is going to say, I called it. And you might be the guy going, woo, yeah, I called it right. But in reality, there's always going to be someone there telling you that they called it. So for most of you, sitting out today is probably the better choice. Because what is the rule? Make money or be flat. Make money or be flat. I can be flat 9 times and make money once. And I'm up. Have you ever taken 3 or 4 losses, 5 losses? It's terrible. Working your way out of the hole from that, it sucks. You have everything against you. You've got unknown information against you. You're in a binary event where anything can happen. And you've got three choices. Have an edge for green. Be flat, not lose any money. Or gamble with real money. And it's a coin toss, right? Basically. So most of you would do well trading the reaction. Something like that. Hell, most of you probably do better just down here in general. And you know that shit, your hair will be on fire down here too, right? That same guy that's been pumping. On here. His hair's on fire. He's upset. He disappears. Meanwhile, the buyers are down here. We're going to buy this, bro. Make sense? We're going to take a stab at it, man. We got a marked bottom. We got a new high. We got higher lows. Buying this, bro. Meanwhile, you have no money. You called it wrong. Or I'm in full tit bull puts and we ramp. And you fuck me, man. I could have shorted this down from a known high. Could have bought this at a known low. And we're right in the middle, aren't we? This is almost built for suckers, isn't it? This is right in the middle. Trend, 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 trend. And we're guessing, aren't we? It's going up. It's going down. In reality, you'd probably be better in range trading. Most of you. You get opportunities, though, for it, right? We front ran expiration yesterday. That looked good, didn't it? We didn't get the print we wanted. It looked good, right? The setup was there for the down move, wasn't it? We had some edge. Today, there's no real edge, in my view. FOMC, no real edge. Some of you will say, oh, there's edge because it's actually expiration for the downside move. That can work right against you. We can ramp VIX, and we can go up. So you've also got other people talking to you, too. If I sold 670s, if I own SPY and I sell you these, I mean, I can roll them higher, but you know what I'm going to tell you every time you get near this, right? What am I going to tell you? Oh, bro, we ain't going up there, man. Ooh, no, we ain't going up there, man. They'll make an excuse. They'll tell you, I can just roll them to 680. Bullshit. These guys do not want that. They got spreads out. They got all kinds of shit. They got wings on wings on wings. They got like mutated flies and condors and shit with big ass wings. So you already know you got these guys against you. You got these guys against you. You got dip buyers against you. So the entire narrative is lower, isn't it? So everything is kind of cloudy today, isn't it? You definitely don't want to be an options seller and want to see this move, do you? Definitely not. So cloudy information. People arguing for policy for other reasons. Sellers from Wall Street. You're a retailer with limited information. I'm going to say you stay up here, you stay down there. Now, for the rest of you that are degenerates and gamblers and do not listen, because this is actual advice, just hang out down here. Hang out up here. Easy. Right? We go up there like this. Yahoo. We can check that up together. You know? Scare the option sellers, right? Come back down here in a trend, right? Come back up, you scare them again. End of month. Easy peasy. Come back down here. If we bounce, woohoo! We can buy that dip, no big deal, can't we? Option sellers unite and are happy. You get to long all this up there, easy peasy. If it's a bloodbath, you're the guy that's hanging out over here. Hold on. You're the guy hanging out here, and you're the guy hanging out over here and over here, right? Up here and down there. You're like, Cap, I'm waiting down here. Cap, you want me to be rich at the end of the year and not be red. This year in particular, we're working on that, right? We're not going to be a fucking degenerate this year, right? We're not going to whine if it goes higher. We're going to say, oh, we're going to jump on that later, Cap. I got you, bro. If we blast down here and we get the nice little, well, wouldn't look like that. Would look like, blood down there, right? But if it starts to recover, hey, Cap, we're going to buy a dip. If we start to break trend, oh, it's really bad, bro. 2 and 3% tomorrow, bro. Yeah, we break the trend and start making a new low. We start becoming sellers. You haven't lost a fucking dollar. Nothing. Hell, you could even not be a seller. I'm not a seller, Cap. I'm a part of most traders where I just want to buy a dip. Okay, we're not going to buy a dip yet until we get into mid-October. We've broken trend. We're starting to get weak. Make sense? That should be your plan today. I have a hedge on the market until November 17th. It goes all the way down. I don't think we're going to print it, but it goes all the way down here. I start printing money right here. Out there, 632. They're closing that door on me right now. And they're trying to close 650 on me, too. Market is trying to defend 650, which happens to be where trend is. And even if we got down here, I bet you that my hedge, they'll pop that and come straight back up. They will not print. I don't start printing until here. So I have a hedge in the market. Where am I going to buy the market? Where do I want to buy the market? Hold on. Sorry about that. I want to buy it down here, bro. Or I want to buy it above. I want to jump on that today if I can. Right? Start ramping that out. Then I want to be a buyer right here, right up there. Yeah, bro. Make sense? Hourly triggers underneath me. I want to be down there to consider a dip buy. I'm not really interested in selling this. Maybe I'll set up a sell window. You can open, most of you can open your broker. Some of you can't if you're on a desktop version, but if you're on a Windows version of a broker, you can open multiple windows. You can just say, hey, we start breaking down over here, Johnny on the spot, ready to fucking trade 652, 650. Slam the put button. You can do that. You don't even have to do that. You just wait down there. Bring it to me so I can buy a dip. So even where we are right now, look at that trend right there. It's kind of no man's land. Ring it in here, do nothing. No move today. No hawkish, no dovish Fed. What else does this provide you with? Say we stay in here today. Gives you an opportunity to make a decision if you're selling later or even afterwards. Say the dealers murder the whole move today. No move. So you're probably better off waiting to be positioned here unless we're above or we're losing everything and you can slam the put button. Or you're just down below over here, Johnny on the spot, waiting. Now for the rest of you. If you're a degenerate like I am, I got to get that out of the way because it's not just show that to you here. it's not just not financial advice, or I don't want to get murdered in the middle of the street somewhere because some guy took his wife's money out of his savings account and blew it on the stock market. It's not glamorous to be that guy. It's not cool. It doesn't help your ego, your id. It doesn't help your emotions. It doesn't help your greed. I'm telling you that. Some of you are really quick. You're like, I can get in for this move and out. I'm in, out. I'm on a 10-second chart. I'm on a 1-minute chart or whatever. But me talking to you with even a minimal delay, on Twitch, it's almost instant. It's like 3 seconds. YouTube native delay is like 15 seconds. When you hear my voice on YouTube, you should get on Twitch if you can. And you're trading your own plan, and you tell me, hey, Cap, I'm a great trader, but when I look at the numbers, I'm like, I don't know, man. I think people say they are, but they get blown up because of a few common reasons. And we went over those yesterday, didn't we? We went over those reasons, right? Range expansion, uncertainty, emotions. And you really want to be the guy almost doing the opposite at every time, exhibiting some patience with the market and not having to have that one fucking trade. Like really, truly. There are so many moments that you get on a major pullback, a correction, a correction, a major correction, a correction, or a pullback, where there's only a few of my trading partners standing there. There's only a few. Usually, if we're on a major high, people are getting blown up if they're short. If we're in a major low, they're getting their hair's on fire. Like, this is everywhere I go. This is like FinTwit, Wall Street Bets, Discords, you name it. It doesn't matter where I go. Fucking hair on fire, blowback with a flamethrower. And I'm like, dude, you're not ready with the money? What the fuck are you doing over there, losing all your fucking money, getting cut up in the middle? You're like, the GOAT says this, right? Brian Watts says this shit. Don't fucking diddle in the middle. And on a larger scale and trend right now, we kind of are diddling in the middle, aren't we? And the great traders, when everything's on fire on a high or a major high or a major low, it's harder to short the major high, I agree. But on the major lows in particular, they're like layups. It's like fucking softball. It's like hearing an underhand throw you a fucking softball, bang it out of the park. So I just don't understand where, I understand where we lose money. I know where I lose money is in that. And all those things that I listed to you. Not being patient. And for most traders, they need how many trades a year? 2? They need a seasonal low in the spring and a seasonal low in the fall. I don't give a fuck when it happens. February, March, April. I don't give a fuck if we go vertical into April 31st. You're just looking for that one seasonal low, that confirmed bottom. Same thing in the fall. I don't care if it's July, August, September, October, November. I don't give a fuck if it's December 31st. You're looking for that one seasonal low. Then you got to be ready for it. And sometimes you can't participate with all the fun games. Sometimes you lose out. You're like, oh, hindsight trading, man. I would have won that trade and this trade and that trade and that trade. Most of you, that's a lie. Some of you probably are good for what? 9 trades a year in the bull side. In a bull market, you might be good for 9 or 12 trades. Between major corrections, and pullbacks, maybe 9 or 10 or 12. That's where the meat of your money comes from. So if you're trading this today, the next rule would be what? Do not trade anything where we are that you cannot lose. So if your account is 10 grand, what's money that you can't lose? What do you think it is? Probably $100. I'm serious. Like today, on this day, if you had a $100,000 account, maybe a grand. You know, I'm going to play lottos today, bro. I don't think anyone is positioned here. I wouldn't be. I think it's insanity. I want to short big highs. Like, whoo, way up there. I want to short under the hourly trigger. I don't even want to short that. I want to short like under the daily trigger. I'm looking to buy dips. Let me show you something else here. I want to show you how many times these sellers are wrong. Not just fucking wrong, but calling like this is the top. Give me a minute here, guys. Gotta wait for this to load up. And I feel like this is the top, man. We're not doing 3%. We're doing 5. Doing 10, man. Every time we cut rates, it's a fucking bloodbath. Over here, maybe not, bro. If we're not cutting in a recession, I might get a pullback, man, but it's probably not that bad. But that doesn't tell you anything, does it? Like, I don't think there's an edge in being told that. Do you think there's an edge being told that? I don't. All I know is one thing that's important, and I want you to remember this, okay? Very important. I want you to remember what I've taught you. When we're in a bull market, right? You're going to expect pullbacks to the hourly trigger and then pullbacks to the daily trigger. Up. Pullback on the hour, the hour, the hour, the hour, the hour, the hour. A pullback to the daily trigger. Up. Another thing that you're not going to expect, even on a down move, is for the daily trigger to chase price. So if you get a down move in the market and you do not see the daily trigger chasing price, you know they're just, see that right there? You see how the daily trigger is not chasing price down here? Do you see how the daily trigger is chasing price right here? That's bad, right? See the difference between that one and this one? This one, red, no yellow. This one, red and yellow. This one, bad over here, right? Now, let me tell you one more thing here. If you're in this bull market, you're looking to be what? Buying the dip. You're trying to buy the dip on the hourly, the daily, and even the weekly every once in a while. As long as the daily trigger is not chasing. This is called stretching price. If you do this repetitively over time in a bull run, you're going to be a winner. If you begin to see this, this gives you the, hey, let's get off the train. If you're in it all the way up, you're literally being given an exit in an orderly fashion to get off the fucking bus. But you have to do this over and over and over and over, repetitively, so it doesn't put you in the red. And this is every time. This goes back to 1890s. So when you hear someone say they can't call a top, they can't predict markets, they can't tell you when it's going to crash, they're lying to you. Or they're uninformed. Or they're just ignorant. When you have price, hourly trigger, daily trigger, weekly trigger in order, you're risk on. You step off only when that happens. Let's look where we are right now. Let me show you something else. So you have price hourly, daily, weekly, and across. That means get long. And buy pullbacks and corrections the whole way. These bears have been wrong. I can't count how many fucking times. I can't count. So let's look at a bad scenario. Let's look at we're wrong. All right. Oh my God, we think we're going to go up. And then they're saying 3% correction, right? What's 3.5? Let's go look. Oh, right here. I think they said 2.5 to 3. This is 3.5. We'll give you even the ugly. Done that before. Right there. Another one right there. This is where your buyers are. This is 3. So we still haven't turned into crash. So just be a normal pullback. Buy the dip. Anyone that's sitting there saying, well, I want to be sell side, maybe some of you can. Like 30%. Less probably. If you had just done the easy trade and buy pullbacks, so you're buying the dip, buying the dip, buying the dip, buying the dip, be way better off. So we're still by the dippers in here. And hell, we're even by the dippers lower. So we blast down here, right? Get underneath it. You start hammering down here like the bears want. Oh, I didn't see a dip to buy, bro. We broke underneath it, rejected the daily trigger. I didn't get to buy a dip. I didn't lose any money. Just start heading down here. It's nasty. And I'm like, oh, I'm looking to buy a dip down here, bro. Somewhere in this vicinity. Fuck yeah, bring it down. Only question I have to ask myself is, is the daily trigger crossing down violently, or is it just kind of hanging out? If it's just hanging out, I'm going to be looking to buy that fucker, aren't I? So I didn't get caught here. The daily trigger's up there, so I'm going to be looking for a bounce, aren't I? Oh, yeah, man. Here we go. Back again, baby. Woo! Buying, baby. Let's say the daily trigger races down with us. Whoa. Yeah, you get with your trading partner and you're like, yeah, that daily trigger's down there, man. I don't know if I'd trust that fucker we bought. Does that make sense? And you can trade all this down, whether you have the daily trigger or not. You can trade all that down. You got the confirmation up here. Now you're a seller. You turn into a dip buyer. Right now, the daily trigger is coming down. Yeah, maybe we go a little bit risk off here, man. Let's say you're long this whole way up. You're still almost always provided with what? Even if you get the daily trigger crossing down, it's almost always a process. It's almost always like a bounce. This is, you know what I mean? Bounce. And that's bullshit over here. Almost every time. Even from up here. And even if you go through it. Even if the daily trigger stays down here. It's almost always an exit. Orderly fashion. Thank you. I'll get out now. And then blood. Show them to you. One right here. Get out. Right? Oh my God, terrible. You're long from back here, from over there. Right when you're parked here, you see the daily trigger. Nope, bro, sorry, I'm out of here. I'll get back on when conditions improve. Same thing over here, right? All the way down, no daily trigger. It's coming back. Don't worry about it, bro. Bye, bye, bye. Look at that. Up, 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 up. Oh my God, what happened here? Daily trigger slamming down. Uh-oh, not good. Risk off. Okay, risk on again. Right? Not too bad, right? Daily trigger crosses over here. Risk off. Right? Not caught in a major crash, right? Same thing over here. How many times were they wrong? There's the daily trigger crossing down. Risk off. But you were already long from way down here, weren't you? Way down here you were long. Right here. It's a good return, isn't it? There's risk on. There's risk off. Pretty good, right? That's good returns. Bad returns, right? Daily trigger cross, daily trigger, weekly trigger cross, upside. Nice little trade, right? As of right now, you're a buy the dipper. Even like this. This looks gnarly, doesn't it? It just looks so good to short cap. I get it. Get it. It looks good to short here, 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 here. Looks good to short there. Looks good to short there, 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 there. This time is different. I don't know, man. I'd rather just be trying to buy dips on the hourly and the daily until it fucking fails. And then I can go sell the rip here. And even then, if the daily trigger doesn't follow me down, I'm fucking buying the dip down here, man. So this is the big trade, isn't it? This shit in here is nothing. Can you imagine how many times you got to call a fucking top to be proven wrong? It's the big one, bro. We're going to crash all the way down here. Fuck that noise. You fucking wait until price is down there. Oh, shit, man. We lost all this. This bounced. Got a new low now. It's not looking ugly. Horrible. New low. Okay, top's in for now. How long is the top in? I don't know. We got to wait and see if the daily trigger comes down or not, man. We're going to look to buy a dip down here. Let's start selling this. Now I'm sell the rip. Now I got some stops above. You know, and I'm by the dipper unless the daily trigger's falling down there. You'll see it. I'll see it. We'll regroup over here, man. So we're not even there yet, are we? Even if we jackknife down today. Even if we jackknife down today, you're still a buy the dipper. You're buying dips and you're buying dips. You know, you'd have to see like the break below. Oh, I didn't get a chance to buy the dip there, man. Well, have we recovered yet? No, actually, we started stalling out just below the daily trigger, bro. Well, shit, let's sell this fucking thing then. All right, what are we going to do to sell it? Well, shit, we make a new low. Let's set up a trade. Okay, fuck it. We got one low right here. We got another one. I'm Johnny on the fucking spot. I get my bear suit on. We start hammering that down together. This is like 70% of you. We would I think it's better these days. I think retailers are doing better. Most of that data comes from like 2002. I think until 2008, 2010 when you hear those comments. 70% of you are losers. 98% of you blow up within 3 years. I don't think that's recent data. I think you're smarter with where the internet is, the communication level. I think that number is much lower. Seriously. But you want to be that trader. You really do. Then you're going to hear commentary from people saying, well, I can trade both sides, or I'm just a day trader, or I'm just this, or I'm just that, or I only do well on sell side. You'll hear that commentary, but the fact remains that most of you are not that person. They might be the loudest voice. You might think, well, that guy's so cool, I want to be him someday. Well, that guy is, like, I'm just going to tell him I can do it. Most of you would be better served not doing that, because the data suggests that you're a buy the dipper. Data suggests you're a bull. Data suggests that you like buying dips. Do you want to be an angry or an upset buy the dipper? No. You want to get your shit blown up as a buy the dipper? No. You just want to be waiting to buy those fucking dips. Right? Buy those fucking dips, right? Back up on the daily hourly trigger, back test it. Woo! Woohoo! Woohoo! Back test the hourly trigger. Woohoo! Back test the hourly trigger, get a new high. Woohoo! Back test the hourly trigger, fail it. Hey, well, wait a minute. Okay, it's dropping down. Still be a better buy the dipper, wouldn't you? So many times that even if you fucked it up, you could take that 1L. 2 L's. So many times you'd win just by following those simple fucking rules. Watching velocity. Watching hourly velocity on a 30-minute basis, right? Watching the daily velocity and weekly velocity on a daily basis. That'll tell you what. Is it going to hold or will it not hold? And what is Velo telling you right now on an hourly basis? That shit might not hold. So this is telling you that this may not hold today. We get some bad news, get a hawkish Fed, this might not hold. So if that's the case, what have we done today? We've traded down to the hourly trigger. All we need to do is mark a bottom. So what are the rules? This is on every trigger, right? Come down into this half-hour trigger, right? Mark the prior high, which in this case was right here. Did we get a new high to buy the back test? No. So we ain't buying it. Right? We have another one right here. Got the hourly trigger, right? All you got to do is look at your prior high. Where's the last prior high? You got one right here. Oh, God, the inverse head and shoulders. I hate these things, too. But let's say you come down here. Let's say we go all the way down here. I'll just draw it for you. So we come all the way down here. You're like just watching. That's all you're doing is watching. We make this like a 5-4 or something. And you're watching just that prior high right there. That's it, right? That's simple. All of a sudden it bounces. Whoop. New high. Woohoo! So here's step one. I'm looking to mark a bottom. This is the prior high right here. We go higher than that. Fuck yeah, baby, do it. Comes back down here. And now you've got some information, don't you? This shoots back up again, right? And you have some new information, don't you? So you've got what? Let's draw like this. There's green. There's gray. This is red. This is green. This is red. You can kind of expect up here, aren't you? Challenge that. This is dangerous as a buy the dipper. Dangerous. This has about a 15% edge as being a winner. Stop move right here. You're not a seller, you're a buyer. This right here is like a what? 30%. This one right here, 30%. Usually pretty good though. Could even turn to 50. If you tip your head up here, then you go up there and do that one. This one's 30 up here, so this one's 50, excuse me. %. Why is that 50? Because you have momentum underneath you. Because you've shown that these sellers here are weak with the new high. Your next batch of sellers are way up here. You can get out here. So there's a big 50% chance of winning. So you're taking that trade right there. And then if you pop your head up, it tells you automatically that you're stronger than these sellers. So you're Johnny on the spot again, aren't you? And you're at this 50, maybe even 70% chance here. 75, maybe even 90 on this pullback. And now you're going to crank. Now it's like going vertical. This is when you get Cap Jim James saying, we're going to start squeezing. I already know that we're at about a 75 to 95% chance of ripping their faces off over here. So your chances improve as you wait. You do this repetitively, and you wind up with shit like this. And you're in the best parts of the trade. They blast you down under here, underneath this hourly. Whoop, we're not buying that dip. Well, wait a minute. We came back up here. I can buy that one. Bam, bam, bam. Yeehaw. So even today, most of you would do better today, even if we squeezed out, break down here, even if we go up here today. Trade 660. Probably do better off trading that, or even trading that. Look at it where it is. 660, 660, 250, trying to trade 670, get out of like 678. The meat of the trade hasn't even been taken yet. Meanwhile, while you're dicking around over here, you're like just dicking around where you shouldn't be. And you have all the time in the world to jump on the fucking baller part of the trade. So there's two big lessons here. We're in by the dip. Sorry, this is Dixie, by the way. Apologize for that. I'm just waiting to watch these equal highs right here. See them right there? Or lows, excuse me. I'm a bull. Everything's a high to me. Let's go look back at where we are. Hey, look at that. Fade that, right? Fade this, fading into 2 p.m. Not getting torn up right now, are we? Not buying calls, having them annihilated. Not buying puts and having them annihilated. Sitting on our hands. It's now 12:14. I've walked you through the morning without giving any of your money away, I hope. And you're not making bullshit calls in here that we're going down. You're not making bullshit calls going to break out. We don't have any reason to break out yet, do we? Just kind of hanging out. Now, we're going to go back and we're going to talk about some stuff. And I'm going to take a quick break before we get into the Fed meeting. Now, today for this Fed meeting, you're going to get from me I now have the Elite News Squawker. So you're going to get real-time News Squawker, no delay. Oh, you guys are getting puts now? Is that what you're doing, you dirty fucks? Now you day traders and gamblers have at it. But for the rest of you, don't join them, okay? There's 12:30. Just hang tight. There's 1 p.m. You're like, oh God, Cap's got us going down for the next half an hour. I want to sell everything here. Caps has got blood the whole way down, bro. Balls deep. I would not buy puts here, personally. I don't think there's any trade valid for any trade with an edge for a day trader here. I don't. I do not. I think you're hanging out on the outside is the way to be here today, or at least some validity that we're going down. Now, here's the 65.90 right here. This is your downside range as of right now. Let's put it there for you. I'm going to try to buy the fuck out of that personally, but what I want to talk to you about next is what I want to talk to you about next would be some of the shit that's been said. And I'm not quite furious about this, but I kind of am. I always hear this like, bro, we need rate cuts for the market to go higher. And I'm going to tell you right now, from everything I've ever seen, that is not fucking true. And you guys have seen me on this show, even went over it with you 2 days ago. Only one time in history have rate cuts been good for a market. I don't know why people say that. I don't know where the fuck they get it from. I don't know why they say that. We went over this, I think, on Monday or Friday. If you want, I'll go over with you right now. I can show you every effective fund rate cut, always, except for I think it was 1967, results in a down market. And only in 1967 did we not enter a cutting cycle. It was like a cut and then a hike and then a cut and then a hike and a cut and a hike. I need you to know, if you're a bull, we're in a cutting, or we went into a hiking cycle, went into a pause, literally, historically. If the Fed tells you that we're not in a cutting regime, even if today you got a knee-jerk reaction to the downside for that statement, it'll still recover historically. And I mean like 99% of the time. You might get the knee-jerk down to erase the expectation of rate cuts and future cuts and a downbeat attitude and all that kind of stuff, but the market will come back. I know that sounds shocking to you. If you're a bull, you do not want to enter a rate-cutting cycle ever. Ever, ever, ever. You do not want to see the language manipulated that we're going into one. You need to be aware, too, of what the real language is. And the language as of right now, as I understand it, is that we are not in a rate-cutting cycle the last time Jerome spoke. So today you want to listen for that clearly. You want to hear him. Are we in a rate cutting cycle or not? A bull is better served historically, and not like 1 time, not 7 times, 99% of the time. For where we are, they're better served with, we're not in a rate cutting cycle. We can cut and raise. Even if I get like a hawkish cut, here's your 25 BPS, fuck off. No, you're not getting one in October. No, you're not getting one in December. You get the knee jerk down, but it'll come back. If he tells you today that we're in a rate cutting cycle, be wary. And be careful about parsing who's doing the talking. You want to listen to him specifically. You don't want to be listening to fucking newspapers, TV shows, the White House, none of those people. You want to be listening to whoever the Fed chair is. I don't give a fuck who the Fed chair is. Whoever that is, you listen to that guy. And I want to talk to you about that right now if I can. I want to talk about a few things here. Hold on. Let me go through a few of these things. Hold on here. Give me one quick second here. I want to start here by reading you this first article. Now, this is after, this is September 11th. This is post. Or actually, let me rewind this a little bit. The last official, oh, look at that. Oh, yeah. The last official, want to see it? The last official speech from Jerome Powell, the official one, was Jackson Hole. And I want to read a few bites to you. Just to be clear, before we get to this FOMC today, what the actual policy is. Not what you're reading and watching and hearing everywhere else. Fed makes room for rate cut. Fed kills average inflation. Targeting caused so much damage when inflation raged. Key information here, right? Powell makes room for rates cut, not rate cutting cycle. Fed kills the average inflation. Why? Because if we do cuts, inflation is going to go up. We're also at the bottom and the start of the one inflation nobody's talking about, right? Cyclical inflation. Not even Trump wants to touch that. He's got to pass policy with rate cuts. You will not hear anything. Remember when you used to hear from Trump, inflation is Biden's fault. You rarely hear him comment on that anymore. He did recently, but only when pride. But he is not coming out and saying inflation's ramping right now. Right? He doesn't say that. There's a reason for that. He doesn't want to admit to that. He doesn't want it in the newspapers. But cyclical inflation is raising its ugly head, isn't it? Services inflation, not tariff inflation, good old-fashioned inflation. So right now, if we didn't cut or we only give a one-off cut, yeah, make it a little bit of inflation. But you'd also have to address the fact today that it's possible that we're heading into cyclical inflation. So you want to think about that today when Jerome speaks. Do you get the hawkish cut? Here's your 25, asshole. But cyclical inflation is raising its ugly head. That'll fucking send the White House off its fucking rocker. It's the ugliness in the background. So I want to read to you what Jerome actually said. So they removed the average inflation. Why? Why did they remove average inflation? Because they're not going to fucking hit it. You're going to get a cut. So we can't do it. There's no fucking way you're getting a cut and targeting 2%. That's what I want right there, that red bar right there. That's your target downside, by the way. So Fed to proceed carefully with changes to policy stance amid heavy concerns about rising inflation. Powell's speech today at the Jackson Hole conference had two major components: short-term monetary policy for the long term, and the Fed's new monetary policy framework. Monetary policy, shifting balance of risks may warrant adjusting our policy stance, but carefully. May warrant. He didn't say shifting balances of risk warrant adjusting our policy stance. It says may and carefully. Powell made room for a rate cut in September as the balance of risks appears to be shifting to concerns about the labor market, not inflation, and I agree on this. You can have higher inflation as long as you focus on jobs. Jobs is probably the number one. Well, maybe not number one. Deficit's probably number one. GDP number two. Number three, unemployment. You need a fucking deficit. You need to be spending. You need GDP. That shows growth. Even if it's lower, as long as it's going up a little bit. And then you need what? Decent jobs, decent unemployment. Fuck inflation. If wages keep up, we're good. And if the consumer data is good, they can eat a little bit of that, can't they? And the hard data on the consumer is good right now. Way better than I expected. I was like, maybe when we do tariffs, they'll get down to like a 6 or a 7. The consumer data, you were at about a 10. Literally. Even outside of what Trump says to you or the White House or anybody else, don't care if it's Biden, don't care if it's Obama, they're all going to tell you bad shit. All of them. But the truth is, the data that we have suggested that you, not only were awesome when Trump became president, you were like a 10. You were better off than you were before COVID. I know you don't believe that, but that's the facts. That is what the hard data says. If you read it, that's what it says. Now, you don't read that when you read Twitter or fucking Wall Street Journal or New York Times or anything else. You just consume 140 characters. You consume some kind of like astroturfing on Reddit or BluesSky or Truth Social or wherever. None of you do that shit. Some of you do, but most of you don't. If you actually read that shit, you are way well off. And every other voice that you hear counter to that is anecdotal or a small member of a small group that's just angry. I'm mad. I'm not a part of the good guys. The vast majority of people are not complaining, or they're complaining, but they're still well off. Like, people hate inflation, right? I don't want to fucking pay $20 for eggs. All right, man, how much you getting paid last year? Well, I was making 80 grand. How much you getting paid this year? 100 grand, bro. So you could actually have more money to pay for those eggs, right? Yeah, but I don't fucking care. Fuck $20 eggs. I get that. I understand that. I get that. But it's still not the data. So as of right now, you can absorb inflation if we cut. You might bitch about it. You might whine about inflation, but the data suggests you are in good standing. And it also suggests that you can take a little bit of heat and wages are still keeping up. So a cut's probably going to happen, but the language matters today. Because at Jackson's Hole, the language did not say cut cycle. Powell made room for a rate cut in September as the balance of risk in the 30-year is telling you you're not getting any fucking cuts in October and December, by the way. And that is the bond vigilantes telling you to fuck right off, thinking that you're getting a cutting cycle, even though you're being told this because of policy that wants to be passed by the White House. Powell made room for rate cuts in September as the balance of risks appears to be shifting to concerns about the labor market. Show that to you there so you can see it. Sorry about that, guys. Hold on. That down there. Make this a little bit bigger for you. You can see the cell is right there. Powell made room for a rate cut in September as the balance of risks appears to be shifting to concerns with the labor market, but it was tempered with lots of concerns about inflation, including his projection that the 12-month core PCE price index for July to be released in a week would accelerate further. Now, we already know that it has, right? We know that services inflation is where it's at right now. We have not seen tariff inflation. Matter of fact, we've seen corporations and producers eating tariffs, contrary to what you're told. And cutting rates as inflation is accelerating is a delicate affair that could spook the bond market and drive up long-term rates, which is precisely what happened in 2024. When the Fed cut by 100 basis points and long-term yields rose by over 100 basis points. So we kind of want to be watching like the 10 and the 30, don't we? So Powell laid out a scenario of carefully nudging down the policy rate rather than an aggressive series of rate cuts. I'm going to say it to you again. So Powell laid out a scenario of carefully nudging down the policy rate rather than an aggressive series of rate cuts. In quote, in the near term, risks to inflation are tilted to the upside and risks to employment to the downside. A challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 basis points closer to neutral than it was a year ago. And the stability of the unemployment rates and other labor market measures allow us to proceed carefully. As we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. This may warrant adjusting policy stance was all the market wanted to hear. So you've got two different trades now, right? Price in, rate cut, 25 BPS, baby. And then you've got the do we get the cut or not is a completely different thing. And then you have everybody jumping on board going, woo, we're getting 25, we're getting 50, and we're getting rate cuts, bro. We're on a rate cutting cycle. And as of today, until we get to this FOMC, none of that is true. Only one part of that is true, 25 BPS. And the market has priced in a fuck ton more than that. Now, maybe he changes his stance today, but I would pay very close attention to that verbiage in that released statement. He acknowledged the difficulties the Fed posed by the mix of weakening labor market growth and rising inflation. Part of the labor market equation is the low supply of labor due to immigration policies. So it does not appear that the slowdown in job growth has opened a large margin of slack in the labor market, Powell said. This slack in the labor market would show up in higher unemployment rates, for example, but the unemployment rate has remained historically low. I lost my place. Between 4% and 4.2% since May 2024. Oh yeah, get down there, baby. Right down there. He said, quote, labor supply has softened in line with demand, sharply lowering the break-even rate of job creation. I told you on Twitter that the fucking bad job numbers is not in unemployment, it's in employment. That's because you have the consumer and you've got a business owner, small business owner, producers, and you've got workers. The soft data is what they feel and think, right? So we're not seeing unemployment. We're seeing slowing of job creation. So you have hard data that disagrees with soft data. The soft data is you. It's the guy that owns the business. It's the guy that's watching White House. It's the guy that's, selling you beer bottles. And what are they saying? Something completely different, right? Like, oh, no, fuck that, man. This whole thing come crashing down. So we're not going to hire any new people. So you need a few things to improve that, don't you? Right? You need to improve the soft data to match the hard data. So the real threat right now is to who? The real threat is to the worker, the middle managers, the business owner, the people providing all that shit. They need two things, don't they? They need their fears assuaged, and they need probably the fear assuaged from the Fed, Treasury, and from White House policy, or maybe some external geopolitical things, Taiwan, Russia. That would help, right? Tariffs. Yeah, we're done with tariffs. We've done all the deals we need to do, bro. Or we've rescinded some tariffs, or SCOTUS has struck them down. Any of those things, right? Just to lend some confidence or time. Well, we never saw those costs pass through with tariffs. I guess we start hiring people again. But that is the real danger right now, isn't it? Soft data, and that has proven true in the past. Soft data didn't match hard data in 2008. That was the gotcha moment they were trying to pull on Jerome last time they were asking that shit. Why does it match? Is there a gotcha moment in here? And Jerome's like, no, you don't know what the fuck you're talking about. Because the hard data was so good. But what the problem is that you were consuming that horrible data. Or not the horrible data, but the bad data. The shit that's fake. You as the business owner, you as the worker, you as the middle manager, you as the producer, your sentiment is horrible, isn't it? You're being told lies. Who and why? That's why we're here. It's the past policy. He said the labor market is soft in line with demand, sharply lowering the break-even rate of job creation needed to hold the unemployment rate constant. It is a curious kind of balance that results from a marked slowing in both the supply of and demand for workers. This unusual situation suggests the downside risks to employment are rising. This is kind of where we're creating a recession. We're not going to win one, we're going to make one. I don't know what's coming. War with China, war with Russia, war with Russia and Europe, tariffs. What the fuck is going on? De minimis? So that needs to be resolved, doesn't it? Or some rate cuts might help, right? Maybe not. Maybe it just helps with policy. Let's watch this down below here. And get on down there. See that green line right there? Close them up there. This is where FOMO lives. FOMO is from here to here. So there's a lot of different, where you think is one thing, it's actually something else. Does that make sense? Where you're like, oh, bro, we got to do this for that reason and this for that reason. In reality, you're being what? You're being used. Being used. Being used to create this. Oh, yeah. Oh, God, yes. Oh, yeah. Oh, yes. Price target hit. It's almost a near perfect fucking hit right there, isn't it? Look at that fucking thing. It's like to a tick. Look at that goddamn thing right there. It's beautiful, isn't it? Look at that fucking thing. Feels so good. It's like wham. And wham. It's beautiful. It's so beautiful. Where are you going, Spy? Why are you going back up again? What you doing, bro? We got FOMO gang in here, man. We got one more. We got FOMO gang. Right there. FOMO gang gonna jump on board now. FOMO gang reminds me of Mongo. Mongo needs down. It's like there's like call buyers at the top. Need that one last little bit there, bro. Are you sure up there? No, man. I'm just right here. I just need that. I just need to jump on that one right there. Let me sell you some puts, bro. Look at that fucking beautiful. Look at that fucking move right there. Fucking sexy. I want to read the rest of this to you if I could. He also said that it is a curious kind of balance that results from a marked slowing in both the supply of and demand for workers. Supply of and demand for workers. On the supply of side, we have not only illegal immigrants being removed from the country, but we're creating an atmosphere of fear for legal residents and for new immigrants, right? We're not just removing people, right? When Gore was removing people, he removed about the same, right? And I think it was during Obama's presidency as a record in modern history, and we still have more people today than we did then, right? Right? That's a fact, right? Yeah. The difference now, though, is we're doing what? We're removing people, we're making it public, and we're also saying, don't come here. Now, I don't know if I agree or disagree with that, but that's what we're doing, isn't it? So when we do that, we're removing the available workforce, right? And we're being loud about it. You know, I'm Bob and I live in, I don't know, India, and I'm like, maybe I'm not going over there. Shit's crazy right now. I keep hearing stories about someone on a visa and they're being removed for this reason or that reason. I don't even want to go through that. I can't bring the wife and kids over there. Maybe I'll just wait. I hang out in India and, midterms are coming. When's the next president? Year and a half? Okay, I can wait. I'll just take a job here. So we have a shortage of workers, don't we? I don't care about how we get new workers or, how we train people. We just have a shortage. That's all that matters. On the other side of it, you have the worker, the manager, the mid-level manager, the director, the owner, and they're not feeling it either. They're weary. So we also have a shortage of positions, but we're not in mass layoffs. We're not in downsizing. Not yet. We can be, but we're not there yet. And the prudent business owner more than likely is going to make out either way, isn't he? He's not rehiring to fill slots. He's not laying people off, but he's not like expanding. He's running a tight ship, or she's running a tight ship. Not replacing people, not expansion, maybe even expanding without new employees. Maybe adding in a little bit of AI. Yeah, I'm going to do some cold calling with AI. I'm going to do this with that. Right? Leaner, meaner, better profits. Tariffs are coming through. I got to absorb some of those. I got to make a deal with the producer and be like, hey, man, I'm going to eat some of this so I don't hire a few people back. Producer says, I'll eat some of this. I'll find a new place to make fucking wingdings at, thingamabobs. All of a sudden, it's working right now. He said the labor supply has softened in line with demand, sharply lowering the break-even rate of job creation needed to hold unemployment rate constant. Quote, it's a curious kind of balance that results from a marked slowing in both supply of and demand for workers. This unusual situation suggests that downside risks to employment are rising. And if those risks materialize, they can do so quickly in the form of sharply higher layoffs and rising unemployment. This would be that what? Actually, if we don't get bad data anywhere else, you might create the recession. I might create the recession. Bob might create the recession. Might not even be policy. It could just be that we force one. So you can see that down there. So you can see that. But then there was some heavy breathing about inflation. Quote, it is also possible, however, that the upward pressure on prices from tariffs could spur a more lasting inflation dynamic, and that is a risk to be assessed and managed. One possibility is that workers who see their real incomes decline because of higher prices demand and get higher wages from employers, setting off adverse wage price dynamics. This usually gives a window to the stock market, doesn't it? But it can be bad, can't it? There can be a moment in the stock market where what? Rising wages, rising inflation is okay. It actually makes the stock market what? Cheap. You're not actually making any money. They're just catching you up to what you're losing. The stock market's going up, but it's not really going up, is it? It's not going up a ton, is it? We're fighting over $1 right now, aren't we? When it's going up like this vertical right now, it's not really going, it should be going vertical. The GDP is slowing. So why all this up? Because money's cheaper, right? It's worth less because of coming inflation. It's telling you. Inflation is coming. You get a rate cut today, inflation is coming. Rate cuts increase inflation. But if wages stay up, we're probably okay. Now, what we don't want to do is get ourselves caught in what? Well, we just came out of COVID, right? We just got out of that. But that could be where we're heading, isn't it? If that was true, what would you do? You would then raise rates. So you might get a cut today. You might get an adjustment of verbiage slightly. But it is highly likely today that Jerome leaves the door open to rate hikes or no more cuts. Do you want that kind of inflation ever again? Do you want to see hamburgers go to 40? They're at 20 right now. You want to see 40? We can easily see a $40 hamburger. Is that what you're asking for? A series of rate cuts. As cyclical inflation is rising, man, I'll go along with it, but if you want to see that, you know what you're going to see the stock market at, right? $1,000 on SPY, easy, no brainer. 1,200, 1,500, we can see that. Even with a pullback or a correction, we can see that. Is that really what you want? Do you want to see new highs from growth, or do you want to see it from insane inflation? Another possibility is that inflation expectations could move up, dragging actual inflation with them. Inflation has been above our target for more than 4 years. It remains a prominent concern for households and businesses. Come what they may, we will not allow a one-time increase in the price level to become an ongoing inflation problem. Let me read that to you. At Jackson's Hole, quote, from Jerome fucking Powell said, quote, and I quote, come what they may, we will not allow a one-time increase in the price level to become an ongoing inflation problem. He point blank says to you at fucking, I should be swearing, but at Jackson's Hole, that they are willing to raise rates on your ass. So with all the other bullshit out of the way that you've read, consumed, heard, seen implied, anywhere else, that fucking quote is from his fucking mouth. And nobody highlights that. Nobody. I'm not going to go with the rest of this, but I want to go with one last part to this. Remember when I told you that the market goes higher? Right? Higher. We're not cutting into a recession. Hard data doesn't suggest that. Even if we get a pullback, like 2-3%, market should go higher. Or we get no pullback, just higher. Or you get a knee-jerk down, but that goes higher. There is one fly in that ointment. And that is, history, right? And what else? The narrative. Right now, the narrative is controlled that we're going into a cutting cycle. You kind of need Jerome to say, fuck off, no. And the bond market's screaming that. You are not going in a cutting cycle. They're screaming it right now. So someone's wrong. Or maybe we're just misinformed. Or maybe Jerome will change that tune today. I want to go over this one last one here because the question becomes all these bulls that say we need to cut to stifle or to spark new growth. We're behind the curve, bro. Growth is slowing. Before you know, it'll be flat. Before you know, it'll be down. Yeah, that's why you usually cut into that. That's normal. You know that, right? Cycles are normal. Inflation has been cyclical since the dawn of time. Prior Fed chairs have said that they don't think that they actually stop natural cycles. They can only attempt to blunt them. What we're proposing is doing what? Removing that cycle? We're not going to go through that ever again, bro. That's garbage. There's no time in history that's ever suggested that's real. There's no fucking time in history ever gone back and had fucking 5-cent hamburgers ever. We have bouts of disinflation, but they're short-lived. We have bouts of stagflation, but they're short-lived. We march on and on and on and on and on. So where the fuck is this coming from? Probably policy. So when you think that people are asking for a rate cut cycle and the stock market will be great, I'm telling you that they don't give a fuck about this stock market. No matter what you think. They're there to pass policy. Then damn the stock market. I got to get this across to cut rates to get what I want to get done, bro. And that's Besant. That's Trump. That's the whole inner circle, wherever the other guy's name is. And I like Besant. I don't dislike Besant. I think he's great. He's a very smart guy, very ruthless, very cunning, very intelligent. I get what he wants to do. I understand what his plan is, but they're not being honest with you. Person with money in the market and the person that lives and works on Main Street. And that can be very detrimental to the decisions that you make as an investor, as a saver. You know, bro, we get a bunch of cuts, man. The stock market's going to go to the moon. Yeah, but did they tell you that you're going to crash? No, bro, they didn't tell me that. Or no, bro, it's not going to happen. Well, actually, it is. You're in a rate cut cycle. We're going to fucking crash. How does 20, 30% sound to you? Yeah, 20, 30%. How does that sound? Can you handle that? No, bro, that's not going to happen. That's what they tell me, man. Start cutting, it's going to be 2, 3%. We're going up. Probably not true. I would expect 20 or 30. Guess who else would? Take a guess. Take a fucking guess. This is another article from Wolf Richter. This is after the Jackson Hole. And he goes on to say in this article, CPI inflation dishes up another nasty surprise, as it tends to do. And guess what this is called? The Fed's nightmare. But it'll cut anyway. There's Wolf saying you're going to get a cut. I agree. And the verbiage and the language matters. But what's the thing that he's saying versus history? You know why I like to listen to guys like this? Because they're fucking old. Something that I sucked at when I was young was listening to the wisdom of my forefathers and mothers. I was young. It's full of testosterone, young, dumb, and full of something else. Should have said that. I apologize. But I was young, and I didn't want to listen to older people with wisdom, with time and life. And now I'm becoming old, and I feel like I don't want to tell these people this because I don't feel old yet. But it's my duty to tell you this as I get older. If you're young and you can listen to somebody with experience in life, just listen to them. Maybe this time is different, but I want to listen to that guy. It's worth something. So listen to a guy that's like 50, 60, 70, 80, and they've lived through these different cycles. They can impart sometimes upon you wisdom. And when I showed you that chart earlier that said, you're not going to get a big pullback, the only time that proves itself correct is when we do not have a difference of opinion from the Fed in the White House or the data. Now, the data doesn't suggest we're going into a recession at all. It doesn't. But the White House is forcing, which is okay. I'm not in disagreement with that, but White House is saying I want a cutting cycle right fucking now. Let's get a take here from someone that I trust, that guy. What does this guy say? Wolf's talking in here. He gives you the whole CPI report. And then inside of the discussion, I want to give you what the zeitgeist says for a lot of bulls. I want to read to you what this guy had to say. And then I want to read to you Wolf's response to this. I think this is probably the most pragmatic thing I read in this article. It was SSK here. He says, and I like what he wrote. He said, won't this sharply steepen the yield curve, throwing the 10, 30 in bonds as well as mortgage rates out of whack? And then he says, at the same time, pushing up stocks and gold. Then Wolf says, QT and rates, steepen the yield curve? Yeah, probably. Throwing the 10 and 30 year as well as mortgage rates out of whack? No, but might throw them back into whack. That's key. And they were and still are out of whack. But this is the wisdom. As to this guy's last question, pushing up stocks, I don't see that connection. Maybe the contrary. Now, he's not talking about this in the run-up into today. He's talking about the actual cutting cycle. That's his frame of reference. And Wolf is saying that, you start that rate cutting cycle, maybe, but I'd be wary of that. I wouldn't. I think Wolf is saying there's no edge there. If anything, you have a higher likely probable outcome if we change that language today, or if we don't. Let's say you get the up, blow off volatility up move, or we bleed and burn, or we get the up move and then we're down and burning after the end of the quarter. Even now or later, doesn't matter. The street's not going to tell you, hey, we're going risk off, guys. Go risk off with us. I'm not going to tell you that. I'm not going to fucking tell you that. They're not. Sorry, this is the TNX, the 30-year. Hold on a second here. I got the wrong shit up for you right now. But I want you to know that Wall Street's not going to tell you. And if we're not in a cutting cycle, or if the street wants a cutting cycle because they want Trump policy passed, or even if we're not going in a rate cut cycle, you know what the street normally does? They at least front run the front half of possible rate cutting cycle, potential of it. The street shoots first and asks questions later, doesn't it? Price in rate cuts, get to rate cut meeting. We don't care. We priced it in. No rate cut, straight down, right? The same thing kind of applies here. Whether it's today or whether it's at the end of the month, whether it's tomorrow, you want to be listening very closely for the street to digest today what the Fed says. In that language on are we in a cutting cycle or not? Even if we get a knee-jerk down reaction, if he tells you, fuck you, no, we're not, that's important. If he tells you we're heading into a cutting cycle, that's important. I would think more that if the Fed today, if Jerome said we're in a rate cutting cycle, the street would probably tell you everything is fine. And they'd likely front run a fucking mini crash. And they'll likely tell you 2 or 3%, but it's likely going to be 5 or 10. And if they front run that like they do with rate cuts, right, or rate hikes, they'll ask questions later. So you get the first leg down, and then the street goes, okay, are we in a rate cut cycle or not? Oh no, we're going to raise rates 25 BPS, bro. Okay, we'll bring the market back up again. Or no, we're actually in a rate cut cycle now, man. Good job front running that. Next leg down. That's the historical example. So very crucial today, the language in what the chair says. And I really don't care what the White House does or says. I don't give a fuck about what the White House says. He's fired. I don't care. He can stay on until the end. I don't care about that either. I just care about what Jerome says. That's all you should care about. You can deal with all that fallout later. You just want to know what the policy is in the Fed. We're in a rate cut cycle or not. They're getting eaten alive in there. Look at that. Pathetic FOMO gang down here. Look at them. Just getting fucking annihilated. You love it? Like slam, 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 slam. Ragdolling FOMO gang down there. I love to see it. They might get one more swing down there. If they were going to get a swing, it'd be up here. I love this ragdolling down here. Just grind them. One more up here. You might get one more down move right here. Try for one more move there. Look to be a seller here, but only if we fail it. New low, right? You'd see it like this. Up. You'd see the failure. Hold on. You'd see the failure, right? Dribble, dribble, dribble down, right? Johnny in the spot, wham, for that one. So, what does all this mean to you today heading into this FOMC? I would say nothing as of today. I don't think it matters too much, but I'd be paying very close attention to it. And I'd be paying very close attention to what the White House says, what Besson says, but more importantly, what does Jerome say? This is need to know information, and it is critical. It'll be critical for you in the coming weeks, in September, October, November. It's going to be very critical. And we're coming into quarterly OpEx. And you might, like, if you listen to Jerome, seriously, if you listen to Jerome, then you don't worry about what the street says, White House says, nobody else. Because you can make a plan, and you might even get the street telling you, let's say it is, we're going to do a rate cut cycle. Don't worry about it. And the street says, don't worry about it. Then they blast your ass down over the coming month and a half. Remember when I showed you that chart earlier where I said, none of this matters, but this matters here? You need to know that information for if that matters. You really do. You 100% need to know that. So focus today on what Jerome says and make plans thereafter. And if you're the guy that's on the edges today, right? I'm on the highs cap like you told me, and I'm on the very lows cap like you told me, and then I consume what Jerome says, you can then make informed decisions to take a long or a short for real money. Not what the White House is saying, not what fucking FinTwit's saying, Bloomberg, CNBC, Steve Leisman, none of these guys. Fucking Fed Whisperer, fuck that guy, fuck all those guys. You want to listen to the verbiage that's coming out of the Fed chair's mouth until that authority and power is lost to a president or the executive branch, which they haven't lost yet. They're trying to lose it, or they're painting the walls on that shit, but it hasn't stuck yet. So until that happens, you're listening to Jerome. Oh, sorry about that. And you have plenty of time. I mean, plenty of time to make that plan. Don't go max short here on, like, oh my God, Jerome's going to give a hawkish cut. Then he's going to tell you that there's no rate cut cycle. We're going to zero. And, oh no, he's going to do a rate cut cycle. Then we're going to zero that way too. Don't do that shit. There's plenty of time. Plenty of time to get the bear suit on, zip it up, and be positioned for it. Now, how do we go up today? How do we go up? Anybody know? In my view, for us to go up today would be an unexpectedly dovish Jerome initially. So there's a window here, and it's PM. If Jerome starts changing policy to like, oh, fuck yeah, bro, I'm going to suck you off and start printing money. You're getting 50 BPS, expect a cut in October and December. You're getting 25 today or 50 today. If you get 50 today and, hey, we're changing our tone and our policy, we're definitely going to, more than likely we're going to change our policy. There could be a huge squeeze. And I need to tell you this other part that I haven't told you yet. every time I've looked on those big policy changes, I mean almost every time, like 70% of the time, very frequently we squeeze. And what we're doing is we're looking for liquidity. And we're looking to close positions. And I want to explain this to you right now. Okay? The street plans ahead by months, if not years. So if I'm long, right? I'm like, okay, I'm going to start getting long for Q3. And we're in Q2. Somebody looking for a low, right? In Q2 to go up in Q3. We're at the end of Q3, aren't we? So if the streets position themselves for Q3, what are they trying to do? Max profit, right? They're not looking for a low right now. They're looking to close in profit. So let's say we change policy. You could see a squeeze here. We blow off volatility. We squeeze up. And these guys are exiting in profit. And then after we get the policy decision, they chew on it and talk about it. And they're like, okay, man, we're going to definitely, that definitely looks like we're going to cut and cycle. Well, shit, I need a high to sell and liquidity to sell from. So max profit to sell the market in Q4. So I don't think you get the perma drop. This, like, is this the top? Probably not. Will there be another high today or this month? More than likely. There's a very high chance of it tomorrow. There's a very high chance of it on the last day of the month. Even if we're weak, there's a high chance of another high in there. You got to remember that these guys have to close their longs and then shift for Q4 and say, okay, I'm looking for a low, or I'm looking for a high to sell into Q4. I'm pretty fucking bared up here, man. I want to front run this rate cut cycle. Maybe Jerome's wrong. Maybe I want to force rate cut cycle. So they still have to position for that. And they haven't done that yet, have they? They're looking to tee off when? October 30th. I mean, excuse me, September 30th. These guys are looking to roll out their positions when? Not fucking today. Friday. And on when? The last day of the month. They ride their shit right to the bitter end, don't they? They got sold calls at 570 or 670. But even if they're going to change their stance, we likely don't break out of the kind of vortex we have in this time period. So you're, again, given some time. So as a trader, I would say don't make any big decisions. Not today. And I don't care if we go down to zero, not zero, but like, I don't care if we go down here today. I don't care if we bloodbath the fuck down. I don't care. You shouldn't be making major decisions today. You should just consume what Jerome is saying because it's an important meeting. And you want to think about what the effects are as we roll into Q4 and then start looking for a fucking high to sell into, first month or two of Q4 if they do front run a bloodbath into, which I think they're a little bit early for, to be honest with you. I would prefer to see them cutting into June or July of next year, I think, somewhere in there. I think they're a little early. So personally, I'd like to see it like maybe a cut today, maybe 50. Personally, that's what I'd like to see. And I'd like to see them cut into the economy deteriorating like we normally do. But if they don't today and we start cutting aggressively and changing stance, I would not be shocked to see a major squeeze. I've looked back in the history of this shit. Very frequently will go fucking vertical. And why are they going vertical? So they can get the fuck out of the market. Because they've been long since fucking Q2 or Q1. Which they have, haven't they? So they're maxing profit, right? And then repositioning for lower lows. I'm about to get long here. Just check here. Yep. Patience. Love patience. Don't leave me behind, bro. Expiring today. Jesus Christ, those calls are still expensive. Calls are stupid expensive still. Thursday. Well, let's look at Thursday. What are 68s running? 45 cents. They are. I'm posting the Discord right now. I'm like, come on, man, just like a little bit cheaper. Figured I talked the market down enough to get cheap calls, and I don't want to pay for them. I'm looking at 668 for tomorrow, 45 cents. My only issue with these fucking things is they'll probably be zero tomorrow at close. And when we reprice volatility, if we go up, I'm going to get fucked there too. So I could hold on. I could go in and out of them directionally a few times, I think. It's almost a fucking beautiful thing right there. Look at that. God, beautiful. Maybe we can get one more jackknife down. I'm so cheap. Like, give me one more down there so I can just go with it. I haven't bought them yet, but I'm looking at 668C for tomorrow. That's what I want right now. They're $4,500 for 100 of them. I would prefer them to be like sub $3,000, like $2,000 would be nice. But that's what I'm on right now. I haven't bought them yet, but I'm gonna buy them. Just a few more minutes here. Now, there's something else we're gonna do today. Give me one quick second here. Let me see if I can. Hold on one quick second here. I want to try to set this up a little bit different than normal. I got something cool for you guys. So I follow Gamma Labs, and I've talked to him in person. Now I like that guy because he doesn't try to spin me a bullshit story, like other Gamma people out there. I'm not no names. I kind of like the clean, easy. You know, this is that, and this is that. This right, and that's how he presents his shit, which I like. I don't want it interpreted. I just want him to give me the fucking data so I can look at it. And that's what I like about what this guy does. So if you ever check this guy out, he's on Twitter. He's licensed. The fucking guy's a smart fucking guy. He's like Vol Signals, real smart guy, you know? Like Vol Signals is awesome too. Vol Signals, Vol Wiz, but that's a different thing. That's volatility. But like Gamma Bros, like Vol Signals does both. I think he does volatility and Gamma. But a lot of the Gamma Bros I don't like. They got to create bullshit with big words that mean nothing. So, and to me at least, they don't have an edge that I've ever seen. But Gamma Labs, if you find him on Twitter, check that guy out. He does a fucking great job. At least in my experience, done a great job. But what we're going to try to do today is I'm going to post something up here for you. I think. Give me a second here. It's 119. We're going to go to the rate decision layout. This right here is going to be SPY. Is my camera in here? Where the fuck is my camera at? Can't see my camera here. Where the fuck is my camera at? Hold on here. Where's my camera? I gotta get my... I'm so vain, bro. I'm not vain. I'm an ugly ass motherfucker, but... Oh yeah, there we go. I'm not actually balding, by the way. My hair was just wet when I took a shower this morning. But I haven't been able to take a break yet, so I'm gonna get that hair. There. My God, I look even more bald. I don't know why I look so bald, but whatever. Close that up. We're gonna do. This is gonna be SPY right here. Okay. I'm gonna set this all up for you. We're going to get rid of this just so we can clean this up a little bit. I'm going to get rid of the path here. This is for you guys. Congratulations if you were a degenerate and followed that path to the downside. There's still a little bit more in here. We're going to leave this one up right here. We're going to label this SPY. SPY, right? Yeah, SPY. So that's right here. And then over here, I hope I can do this today. I hope I can do this. Over here, this is going to be, I'm actually going to take this away. No, I can leave this up. Hold on. We're going to do like this. This is going to be SPX gamma. And before you take a trade here, I got something new for you guys today. Before you guys take a trade here today, this is gamma. This is SPY. Let me make that white so you can clear as day this stuff. This is SPY. This is SPX gamma, but watch what I do here. I got something really cool for you guys. Wait till you see this shit. So I got this 3 thing here, right? Bam. This is SPX gamma. This is our current range. The options market does not have us going lower than right here. This is the intraday range right now, right where we are. If you look at if you look in that corner, look at my cursor up here. See my cursor? This one right here. If you look at this one right here, we're actually at the bottom of our range right now. We need more put buying to go lower. This is our range right now. Okay? We're gonna make this 1 minute trick. 1 minute. There we go. Just like that. So we can stay on top of this. SPX gamma. This is our intraday range expectations, roughly in here. Then a few move that over a little bit. Hold on. Move that over there. Move that over here. Leave this right here. Over here, we're going to do, I don't think I'm going to do the 30 just yet, but we'll do the 10-year. So the TNX, this could be maybe a slightly better representative. This is the 10-year. Right there. And then over here, we're going to do Dixie. DXY. And I got the cool stuff for you. Wait till you see this. I think I got the cool stuff. Bottom left-hand side. This is where the cool shit comes in. I think. What am I looking for here? Chat box, MNF banner, rate banner. Webcam frame, webcam frame, webcam frame. Is it the webcam? Oh, trigger screen. It's trigger screen, cap center screen. Okay, right here. Can I show this? Cap center screen. That should be this one right here. Oh, yeah. Now, this one is where it gets cool. This one right here, I'm going to make 2-date volume. Actually, let's switch it to gamma. Should we do gamma? Let's just check SPY really quick. 2-date volume. See if it's cleaner in SPY. Yeah, kinda. That's 659. That's right where we are. Upside 660. So this is going to refresh. This is going to refresh. And if we see, I'm going to do one more over here. I'm going to do SPY. Hold on here. This is SPY. It's a little bit cleaner here. Nope, and then over here we're going to do SPY net gamma. No, not net gamma. No, I think that's the 2 dates that I've got over there. There and there. Let me get rid of this. Instead of gamma, 2-date gamma right there. Let's check this here. 1-date gamma, 2-date, 1-date. This is the important one. Let me see if I can make this a little bit smaller here. And tighter. Maybe I can make this, bring that down a little bit. And we're gonna, let's bring this down a little bit. Can I bring that down? Control. Nope. Nope. There we go, right there. Oh yeah, that's better, way better. Right there. And this will update. Every 5 to 15 minutes, we'll see an update on this screen. This is 1-date gamma, and this will show if we switch from the market being pinned in to lots of call buying or lots of put buying, 0 dates. I don't know if this is going to work, but sometimes when the market is making large up and downside moves, this will change, and we can sometimes anticipate market direction. The idea here would be, let's say we squeeze. Watch this one. Let's say we start squeezing up. Whoa. And yet a bunch of puts are rolling in over here. It will imply that this is going to go straight to the depths of hell. Make sense? Or if we're blooding down over here and you see a bunch of calls coming in, it's actually going to ramp to the moon. I don't know if this is going to work. Don't be like, oh, Cap, it didn't work. You suck. We're going to try it today and see if this works. And some kind of like real-time call and put buying and selling for 1-date options. And we'll flip back and forth between gamma and the opening of positions. We'll flip back and forth on this today. Okay? No, I didn't even get through this. I got to go potty. We're also going to have on a news squawker with play-by-play highlights on the written press release at 2 p.m. And then at 2:30, we will roll into live video of Jerome Powell as he enters for the speech. Let me know what you think. Is he going to wear a pink tie, a purple tie, a green tie, red tie, yellow tie, green tie today? I've got the new squawker on right now. And I gotta do a bunch of work somewhere else over here. Hang tight here. I got a few things I got to do in the background. I'm like an octopus right now. I'm going to switch over to rate decision to trigger screen. I'm going to show you what I think before it's 129. So I'm going to give you where I'm trying to buy here. I was looking at some calls earlier and I don't see them. So I'm going to show you where I'm trying to buy here, okay? I don't know if I can buy here, but I'm going to show you where I want to buy.
Says ECB well positioned to respond to unexpected changes. Nagel says ECB well advised to remain cautious given uncertainties.
I want to see blood. I might not get it. But for me to participate today and not give away all my money, this is what I want to see. Get rid of all this. You don't need any reference point there. I just want to check something really quick. Bear with me here. I want to see a fucking plunge here. And I want to see us crank. Well, we'll start with that one. Right, just right there. That's all I want to see, that one right there. This is what I want to see for me to get long. Somewhere down in here. Maybe. Where's S2? Right here. Right about there. I want to see that one right there. And then I'm going to look for another down move over here. I want to see 62 today. I'm not joking. That's what I see. I just want to see like this little, rejection right here before we get there. Bloodbath it down, fake you out. And then the ramp right here. There's no cheap calls here for me. I was trying to buy calls and I can't afford them. I can't justify a 45-cent fucking call at six fucking 68. They want fucking 45 fucking cents for like this up here. Yeah, that ain't fucking happening. In 2 days, tomorrow, no fucking way. I'm not that rich. So I need them to be cheaper over here. So I'll try to get like a 66, or I'll try to get something more in the money, 66, 62. Maybe even a 0 date. But I want to wait here until we can burn some shit off. So for me, I need to be slightly lower. Right here. This is where I am. Somewhere. I know I might be left behind. I'm a patient man. So there I am. I'm somewhere down here. Somewhere down in here. Hopefully we can get, oh, this is 45 right here, right there. Hopefully this doesn't leave me behind. I just want to show you what I'm hoping for. I want this to go up. I want it to go blood, and then I want it to rip. So right in there, that's where I am, right here. Right, fuck, that's where fuck I am, right there. I might get left behind here. Hold on here, hold on. It's gotta be fast here. Hold on. Just want to check that. It's about right in here somewhere. Just want to see that fucking dip. I want to see that like whoomp, and then whipsaw. What else am I looking for here? We're going up, baby. We're gonna rip their fucking faces off here in a minute. What am I looking for here? Rate decision. Right there. But just a note that everyone's returning to calls now. Lots of call buying on 659, 658. In the money calls being bought right now. This is on 1-date gamma. On 2-date gamma, they're buying 660s, so all in the money shit, or selling those calls. You know, if you're a theta guy, you'd be like, they're selling them, bro. They're not buying them. There's like always somebody on the other side, though, bro. It's negative, man. If they're selling the 650s, it means I think they're going down. No, dude, they're already out there, bro. So we have option sellers of last resort. It's part of their requirement, bro. No, bro, it's only me. So sorry. Hold on here. On the background over here, I'm going to be watching this right here. Nope, wrong one. What am I going to be watching? Let me get rid of that. Get rid of this. I think I'm going to get rid of that today. It's going to be an FOMC. A bunch of fun. I think we're alone now. We have the Fed chair right in front of us. There's been a lot of bullshit spewed by so many people that have their own motives. And we know that that's its own trade. And we know that there's another trade. And that's the actual policy, which may be way fucking different from what they continue to push out as bullshit. Dun 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 dun. Trying to get away into the night. They call it unrealized and then realized. And so they say, I think we're alone now. I just need to get above 66 or 660, or I need to go lower. We need to be above 60 for me to take another trade on a back test over here. I'll buy right here. Look up on the top right screen. Over there. I'll buy calls. Or I'll buy calls down here. What would make me not buy calls? It would only be if we started blooding. Then I'll buy a bunch of puts with them. But we're not there yet. Trying to get away. If you disagree with me, look to buy some puts around 650, 950 for the down move to 657. You'd want to wait for the rejection down. Make a new low. Buy some puts right there. But only on a rejection at 1 in 4 hours. Let me just check the 4 hour and 1 hour really quick. Check this. We've taken out, just heads up to you, we've taken out, change that. Hold on here. Taking out that 4 hour there. That's where I am right there. Cool. Back to the 1 minute. I don't know what I moved just then, but uh-oh. Did I fuck this up? I mean, I fucked this up. Go back. Can I go back? Go back. What did I do wrong there? The fuck did I fuck up there? Hold on here. I fucked some shit up. Hold on here. Uh-oh. I don't know what I did here. Just hold on here. Running just as fast as we can. I think I was down here, wasn't I? Somewhere down here. That's where I am right there. Might have fucked this up a little bit. Yeah, I fucked up. I don't know what I did. It's 2 o'clock. I'm looking for blood so that I can buy the long. I can't afford it. I'm a cheap ass. I ain't got time for that. Right there. I want to see this jackknife down. Up there. And then I want to see a jackknife. And then up. Way up there. Right there. That's what I want. Right there. Where am I at? I'm somewhere down here. Dude, where's my CJJ shit? I might have deleted a bunch of shit. Somewhere down here. I want to buy this one right here. Have that right? 656, somewhere in there. There I am. It looks huge, but it's not. It's $1, man. Right there. Let's put me in the middle right there. Just looking to buy this fucking thing right here. 114. See this here. Right about there. Lots of call buying now. 659's ramping. Calls ramping right now. Puts going away. They've got a failure up here at 660. Just note that 660 is the prominent. 659, a little bit of 661s, 664. You're looking for upside targets. I am bullish here. Just heads up to you if you don't know, right? I'm just a cheap fuck, so I want to see this come down just so I can buy. I'm not on like bear camp down here and down. I will switch bear camp if we need to, but I'm not on it right now at this moment. Move that over for you. SPX was bought on range. Ten-year yield holding up. Dixie holding up. Let me just check a 4-hour candle over here. down there. We've swept all of that. Dude, this could be bottom right here, man. This could totally be fucking bottom right here. I think this is bottom. We're like within a few or not pennies, but like within $1. I think this is bottom. And you're gonna need to see some serious fucking blood. You're gonna need to see below like 657.
Okay, so we're just over 15 minutes away.
Even then, you're only sweeping 654. Well, plenty of time.
Rate decision, as well as the rate statement and the latest summary of economic projections.
You guys can hear this? I'm gonna turn it up.
I'm just looking at a note from UniCredit. They say the Fed is expected to cut rates 25 basis points at this meeting, with markets fully pricing in the move and assigning only a small chance of a larger 50 basis point cut. They note that Powell's Jackson Hole speech flagged growing downside risks to the labor market, a view reinforced by weak August payrolls and a BLS benchmark revision, showing a 911K downward revision through March. However, a 50 basis point cut appears unlikely, according to UniCredit, given that unemployment remains just spot 1 percentage points above the Fed's equilibrium estimate. They say core inflation is running closer to 3% than 2% and could rise further with tariffs, and business surveys have shown improvement. UniCredit expect only limited further easing, with an additional cut in December and one more in June next year. So again, FOMC rate decision, SEP and rate statements in just under 15 minutes time now.
Just give me this, like, all I want is like a quick, like, panic sell down here. Just flush them out. Theoretically, we're there. 658.25 was the low. I just want to see that. I just want to see that capitulation. I don't know if I'm going to get it. I might get left behind. I was thinking about, let me just check some, let me just see if there's any, maybe there's some cheap zero dates here. Just to put some fucking skin on it right now. Note to you out there, don't do what I do. A couple notes on this stuff, okay? Just a couple notes if you've never traded at FOMC. If you get caught, try to hold on. That's up or down. I don't care. If you're like, let's say you're short or you're long or something, try to hold on because normally you'll have a chance to exit. You'll get a couple up and down moves normally, not every time, but you know, and enough for you to get an edge to not get it totally annihilated. The other thing is if price moves in your direction, your thesis is down, we go down, have a downside stop. That would mean if you bought a put for 10 cents, just be like 50 cents. I'm going to sell it at 50 cents. Don't put an upside stop on them. They're going to go to zero anyways. Just hold them like an iron fist. The next thing is that dealers will intentionally miss targets briefly. They will, when the vol is burning off, they'll reset or they'll reprice the options. So you could be theoretically right in direction, but get fucked. Especially on zero dates. Be directionally right and wrong. So you got to be in and out, like in, out, in, out, in, out, in, out. Another idea would be to be in spreads with more time on it. I've seen strangles and straddles get annihilated recently in these one-off events. I don't know if that's the case today, but recent history, these have become non-events. So you get the move after today, the bigger move, up or down. So you can put some time on your thesis. Spreads helps with repricing too. Though today is a pretty big day where we might not be priced correctly, depending on what the Fed says today. So you might have a little bit more wiggle room here with an outside the range expectation. Today may be one of those days, depending on how Jerome comes out. If you want to know what I think, I'm like with everybody else. The base case is 25. I think the only thing that you really have to think about today is, do you get a 50 or do you get no cut? And what are the implications down the road? And also, what kind of cut is it? Is it a hawkish cut or is it a dovish cut? I don't hear a lot of people talk about that, but you want to listen to that verbiage. Most of you should be standing on the outside of this, like way lower and way higher, in my view. I wouldn't be trying to make your account on this shit. And you can paper trade this too. You could also do a strangle or a straddle, depending if you're doing a short straddle or a strangle. You could like take more time and two directions, cut the other side loose, or make the other side farther out in time. Make them both farther out in time. Collect one side money and then leave the other side on. Open them separately, of course. Do not ever fucking open them together. You want to be able to manage them independently. What else do I have to say about this 2 p.m. thing? We got 11 minutes left until we get it. I'm going to work in the background as you're listening to the news squawker so that I can set up the video for you as well. Just note we are real time this time. There's a few changes here. We're looking at calls and puts as they come in.
Minutes away from the top of the hour, where we
in these white bars right here. See these white bars?
Forecast is for a 25 basis.
Right now we can see that we have more calls than puts.
We also get the.
We'll see if this works. If you see a drastic change, like this turns all this white goes away and it turns all brown. And even if the price is going up, be careful of a flip around to the downside.
With non-farm payrolls nearly stalling over the past 4 months and preliminary benchmark revisions pointing to a record downward adjustment. They say the balance of risks has shifted sharply toward the labor side of the Fed's dual mandate, outweighing inflation concerns. Against this backdrop, SocGen expect a 50 basis point rate cut, which is a well out of consensus call, reflecting the need for forceful action after a prolonged period of moderately restrictive policy. Meanwhile, August retail sales likely rose modestly.
Running just as fast as we can. I'm gonna put that song in your head and then you're gonna leave watching this show. And you're gonna hate me for a few days because all you're gonna do is you're gonna get the song in your head and make up your own fucking stupid words like I do. Like, God damn it, Cap got that song stuck in my head.
Well, hello, everybody.
I'm fucking walking around. I'm thinking about him.
You're a real day trader.
Hate that guy. He rents space in my mind in Tiffany songs. Fuck that guy.
Isn't that one big, huge, brilliant deal? Come on, people.
I got our presser up. I'm ready to rock and roll in the background. I'll have that video for you too. We'll get off this over there. Sorry, some of these screens are turned around. I'll get off that later on, and we'll put the video up for you, or we'll take the call put thing off maybe, and we'll put on the Jerome video. Did we get a consensus on the ties, by the way, Discord? By the way, do me a solid, will you? Do you guys mind posting these links on post a link on your socials? Tell your friends. If you're a free member here, we do this show Monday through Friday, 9 to 5. Self-guided or guided with myself. We have a Discord community we've been cultivating for many years. We have a website, tradethetrigger.com. But you don't have to pay anything. We do this shit for free. So I would also ask you, I don't normally ask, but I'm going to ask, can you please like these videos, subscribe, follow, find me on Twitter, do whatever you can do. Post some links to the show. I'd appreciate it if you could do that. Just to get some exposure out there, whether you hate me or like me, but like, this guy sucks. I don't know. He fucking blows as a trader. Go make fun of him all day long. Whatever you can do. I really don't care. Good or bad, it still helps. I appreciate that if you do that. I don't buy my followers. I don't buy fucking comments. I don't buy fucking viewers. I don't do any of that shit. Intentionally. I'm not trying to be a furu or an influencer or, pretend I have 1 million followers when I don't, 300,000 or 100,000 on that bullshit. I could have sold out a long fucking time ago. So I appreciate that help if you could do that for me today. Post a link to Twitter or to Twitch or to YouTube on your socials. Tell your friends, whatever you can do. It really does help, but I appreciate it. I want you to know that this community is not me; it's them. I just happen to be here trying to keep the community together. There's no like centralized government here. It's very decentralized. We have great moderators. We've got kick-ass moderators, kick-ass mentors, kick-ass admins. We've got people that give all their time and information, helping out their fellow retail trader. People really care about each other in our community, so that they can make money, right? Quit their fucking jobs. So I'd appreciate if you could help me out publicly. Thank you. All right, so we got Spy up here. Give me a fucking whipsaw down now. Come on now. Don't run away. Do not run away. Send that shit down. Down, down, down. Shing it. Now, if you want my ultimate or my thought process and say we're going up. I know everybody, you know, tell you guys something this morning. Every single fucking email I had was down.
Out of consensus, 50
Shocker.
point cut at this meeting.
And I'm up.
Like from the
so we'll see.
Again, we do get the US.
We'll see. I could be wrong. I've been wrong. I do this live all the time. I never do anything recorded, nothing edited. I think I'm right. I think we're going up.
Rate statement and the latest summary of economic projections. A final note from Wells Fargo. They say the FOMC held rate.
I would be the outlier.
For the fifth
I'm like 1% of
Governors Waller
the.
who favored a cut.
I'm 1% of
about the labor market.
I'm the one guy saying up.
With tariff-driven goods, reflation, and
like literally
keeping core PCE above 1 percentage point, about 1 percentage point above targets. Wells Fargo expect the Fed to resume easing this month, lowering the
SPOO's coming right back to the neutral.
with earlier projections.
Trading 659.19, almost near the opening price.
1% on a Q4 to Q4 basis this year.
Literally since
Labor market weakness has intensified since
yesterday at 1:30 in the afternoon until today, price has not moved.
Last 3 months.
Has not moved.
Unemployment rising to 4.3%, the highest in this cycle. They say this
Nickel and diamond while the vacuum cleaner dealers are taking all your money.
They expect the September SEP to turn more dovish, with median dots showing about 75 basis points of cuts this year.
We haven't moved the fucking dollar since 1:30 yesterday.
The statement will
Yesterday's low at 1:30 was
but avoid committing to immediate follow-on
659.16.
flexibility for future moves.
We're trading 658.93. We're making life and death decisions on a $1 fucking move
Spreading out cuts.
while they're just sucking up fucking degenerates calls and puts. God, call and put selling is good money right now. Fucking 30-cent moves in the SPY. I was looking at SPY yesterday and into this morning, and I was like, oh, so you're telling me that like the stock market stayed sideways naturally the last fucking 12 hours? That was all natural right there. It's like, that's what you're telling me? That was all natural? Oh, we just wiped out fucking $4 trillion. Oh, we just added $4 trillion. Fucking fake ass shit. Fucking fake ass market. I got this day trader sauciness. Oh, bears. If we blast down to zero, not zero, but if we break down below 56 and start selling, we start plunging. I will play bear music for you today. I will give you that pleasure. I'll pleasure you. I will pleasure you. Because you haven't had a lot of bear music. Yesterday I was trying to entertain the bears because I felt bad for them. Like, all right, we're going to start fucking front running vol. And they never get a day, so if you get it today, I will do that. We'll play blood. I'll paint blood all over the screens. We haven't had a lot of that, have we? Here and there, but not much. So I'll tease you with that if you're a bear. If you're a doomer out there, how about this? So no, you can't say it. We got 2 minutes. I was gonna say lay out your thesis here. Lay out your the doom thesis why we're going to zero. Why we're gonna Well, we're going to correct 15% and you won't be allowed on that fucking boat because you chose wrong today. Sorry, Bull. You should have been short on FOMC. No, you can't get in short now, bro. I'm sorry. Sorry.
1 minute remaining. I'll
Making
leave
myself
with
giggle.
Interest rate decision.
Here we go. Ooh. Ooh. Squeezing higher now, trading 6602. Ooh. Don't forget we get calls on the don't forget we get calls on the books right now to 660. Ooh. Squeezing out all those bears right now. Pain on the downside trade. Oh yeah, pain. We have call buying coming in for 659C, 661C, C664. Haven't seen a switch yet.
Cut 25 basis points, cut 25 basis points, cuts to 4.25% as expected. Currently 6.25%, 3.62.
Brr, baby, brr.
3.375
Booze! Just traded 660.87 just then.
expected. And over the next 3 years, 3.125% as expected.
Oh no!
3% as expected.
Oh yes!
Fed say downside risks to employment have risen. The median projections show 50 basis
Smashing into our target.
2025. So again, Fed median projections showing 50 basis points more cuts this year.
Woo! Fed now showing another 50. Extreme bull.
In favor of a half point cut.
Extreme bull. Oh God.
So Fed officials' median view of the Fed funds rate at the end of 2027 at 3.1%. Median view of the Fed funds rate end of 2028 at 3.1%. Longer run seen at 3%. Again, the projections implying 50 basis points of cuts this year, 25 basis points of cuts in 2026, and 25
cocaine, baby.
2027. The projections show that 9 of the 19 officials see 2 additional cuts this year, 2 see 1 cut, and
look at those calls come in.
reductions. Policymakers see a 4.5%
calls cranking right now.
Changed from the prior forecast. Again, the projections show one policymaker estimated the appropriate policy rate at the end of the year was 4.
I got it right. We're going up.
And one story, 3%.
Yeah.
Policymakers see the end of this year's PCE inflation at 3%, unchanged from the June projections. Corporate 1%, unchanged as well. So look into the market, strength in the S&P 500, weakness.
Oh yeah.
Following the release of this latest.
Oh God. Now we wanted to hear. Bears, what are you doing? Watch out, Bears. Stay out of the way. Extreme bullsh. Oh God, no. God, no. There's burning shit everywhere.
Growth this year versus 1.4% in June. And they see the longer run growth at 1.8%, unchanged from the June projections.
Oh God, oh no. Panic at the disco. Bears on fire right now. Shit. Oh no, hold on. Oh God, no. God, no, God. Now trading above 660.96. Oh God. Oh God, no. Jeez. Oh. Oh God, oh God, no. Oh geez, oh my God. Now trading 661.62. Almost at all-time highs.
This year.
Oh God! Oh my God! Oh gee, no! All-time highs. Just a few ticks away from it. Oh God! Pain. Jeez, oh my God! Oh God!
So again, the Fed projections there are the main point of contention from the SEP here. So they're seeing a further 50 basis points of cuts this year in the dot plot. We've posted the link to the full SEP on the site as well for those interested. Again, this led to weakness in the dollar, government bond yields as well, strength coming through in the US indices, and US rate futures now pricing in.
Oh God! What's IBM doing right now, Moonin?
Statement, which really is little change.
Oh God!
Before.
Oh my God, I saved the last one for you. I saved the last outcome for you. I said extreme. Extreme moves to the upside for liquidity. That we're coming in the end of Q3 and that the banks want to take the money and run on a high because we squeeze when we change policy. Oh God, terrible. Oh God. Spoo's now trading 661.50, new all-time high, baby.
Connected.
Woo! Woo! Call buying out of control right now on the one dates. Call gamma right now at 660. We're trading 661, 50, 68. We probably now have dealers chasing price higher right now. Woohoo! Woo-hoo-hoo-hoo! Bear down. Bear down. So terrible.
Voice news disconnected.
Hold on 1 second here. Gonna launch that.
US 10-year yield falls back below 4%, near last week's low.
Hang tight 1 second here, guys. I'm just gonna check in something here in the background. Gonna post this, don't we? Hold on a second here. Post this right now. Where's the slap meme? I don't know where it is. I can't find it. Can't find it. Can't find any of the memes to post. Take that down. Hold on a second here. All the way down there. We're going to go all the way down there, and then we're going to go up here. Switch over to the trigger screen. Watch this one closely. Watch this closely with me.
The US rate futures pricing in a 94% chance of a cut in October following the Fed statement. It was at 71.6% before. Rate futures pricing in 69 basis points of cuts this year following
This is what I really want to see right here. Right down there, just so you can see it. Right here, just so you can see it. Right there. Watch this. Bring it all back. And then looking for the new high to get up, okay? So watch me closely here. We're going to go down, right? Down, 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 right?
spot gold hitting a record high.
Oh, I fucked that up again. Nope, that ain't going to be it. Go right down there, probably. Don't trust this. Do not trust this. Do not trust that. You got to play this shit quick. Right there. Just right here, I'm just going to show you this, okay? Normally, you'd say, oh, we're going to go up here and there, up there. Nope. Dealers are going to take all your money, bring it all the way back down, right? They're going to catch the other side of those puts again down here, and then we can go up again. Remember, it's up, down, up, down, up, down. Remember that. Dealers are going to vacuum all this up, make you bet again. Watch that closely here. This is your green bar right here. And truthfully, it's probably lower. Just check this really quick. There's that one right there. There's this one right here. This one right here. That's the one that you want, not that one. 1 minute. Be fast, fast, fast. Right here. Right there. Bounce that one right there. Bring that one down right about there. And then watch this 4 right here. Watch the bounce. If you're short, watch the bounce. They're going to likely bounce this up and then come back down again. And then they go up after. Be down here for longs. Watch that right there. This is the 15-minute right here. You're going to catch a bounce here no matter what. 15-minute right here, that green bar, 15-minute. That's where I am, right down here. Come on, I might buy that. Hold on here.
So after the rate decision now, we're seeing gains in the US stocks reversing now. S&P 500 down spot 2%. NASDAQ down spot 7. The Dow is up though, spot 8.
Hold on. Come on down. Come on down. Due dates, 19th. Hold on 1 second here. Get up here. Look, am I? Oh, where's the fucking, why is Robinhood not working? What the fuck is going on here? I'm long. All right, I'm long. I'm cool. I got Friday calls here. All right, I'm long. Look at that sexy right there.
Markets. If you're a real day trader, go real time at financialjuice.com/purchase and save 67% on a subscription. Let's make a big, beautiful deal, people. Come on.
Right there. Oh, yeah. I got to watch this closely here because if they reverse this to the downside, I got to pull the plug. So I got to watch this real close here. Let's go back over here. I am long calls for Friday. I'm going to try to get rid of them on Thursday open. Oh, yeah. No, don't stop in there. Get rid through. That's not here anymore. It's gone. Fuck on out of here. It's out of here. I got to watch this close here. They'll take all my, I got to put a downside stop on my shit. All right, I got downside stops on them for Friday. I got Friday calls. I got 668 C's. 43 cents, if you want to know. There's our range. Haven't seen any puts coming in yet. Just we're in range right now. Remember that at 2:30 we get the Fed speak. That's that yellow line right here. I don't know if you can see it, but it's there. Dixie getting annihilated right now. 10-year annihilated. Remember, we're still in range right now.
US 10-year yield falls below 3.99% to lowest since April.
So in 10 minutes time now, at the bottom of the hour, we get the FOMC press conference with Chairman Powell. We have posted the live video to this on the feed for those interested.
I got to watch this closely. They're gonna try to hunt. They're gonna try to stop. They're gonna try to. They're gonna try to hunt stops down here. Trying to sneak me out here. These bastards, they fucking won't quit, will they? They never fucking quit, do they? They never fucking quit, these guys. They fucking, it's like constant. There's a guy with his fucking finger on the button. Think tighter, guys. Watch out for this getting parked here. Dun, 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 dun. And listen to what he says. We're gonna go back up and trade the top. We're gonna go trade 61, 60, 40 now. We're gonna go right back up here. We're going to go right up here. We don't know if we're going to fall yet. But I think we're going up and we're going to take all their money. And we said, lots of call buying. There's tons of gamma going up. Did that work? What does that sound like? Hold on here. Wait a minute, we got some breaking news here. We got some breaking news. Hold on here, we got some breaking news. We're getting a live video now. 6 minutes before hold on here. We're getting some breaking news here. Hold on. Oh, wait 1 second here. We got some breaking. Can you see that? No? You can see that, can't you? We got some breaking news here. We're going to go to the we're going to go over here and just check this live video here. What was that? Uh-oh. Oh. Oh. Is that a bear? Oh, God. Oh, my. Oh, no. What the hell is that? Oh. Oh. Oh, jeez. Oh, bears. Oh, my God. Bears. Jeez. I had to turn the audio off on that. You wouldn't want to hear what that had to say. Bears. Breaking. Oh, jeez. Hold on here. Oh my God. We're going to move this one up here. Bears, what are you doing? We're going to go to the FOMC presser right now. Well, you can't. Can you exactly see that or no? Bears, what happened? Dudes. Can we bring this in a little bit, maybe? Does that help? Well, that helps. That right there. What is going on here? Hold on here. We got to widen that. We got to get the shot of J-Pow in there, don't we? Oh, yeah. Oh, yeah. So we can get Jerome in there, the full Jerome. All right, so we got Jerome coming up just the next few moments. Oh, God. That was terrible. What the fuck happened over there? Good thing I didn't... Oh, God. I think we're alone now. It's just me and the bears. And they're not happy. Should we switch to a dual screen? What should we do? Like, should we stay on this screen so we can watch this stuff over here? 10 years holding up. Do we just do SPX up there, maybe? How about we move this one over here? Get rid of that one. We'll just show this one over here. This is pretty cool, right? It's working. This thing's working pretty well.
S&P 500 rebounds back in positive territory.
All right, we're coming into 2 o'clock now. Now, I want to warn you here, okay? Just watch this closely here. Oftentimes we'll get like up down bullshit, right down here bullshit. You're gonna get a lot of like bullshit. You should be considering, if you're bullish here. Oh, here we go. You should be considering rolling out farther in time with spreads here. Purple tie, baby, purple tie.
Good afternoon.
Calls coming off right now. Some puts coming on. Watch this. A little bit of hedging going on here at 660p or 660p. Calls coming off, not necessarily big.
Remains low. It has edged up.
Inflation.
Voice
Job
news
gains have slowed,
disconnected.
and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals, and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant. In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the marked slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up, on balance, over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this,
They're about to take my stops right now.
sides of our dual mandate. With downside risk,
They're trying to take my stops right now.
the balance of risks has shifted. Accordingly, we
Watch this closely here. They're hunting me bad here.
more neutral policy stance. With today's decision,
They're straight like vacuum cleaners in here trying to take people's stops. I'm still long right now.
we will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. In our SEP,
We did open lows over here, but even though they're unlocked, we haven't gone there yet. With that trade, we've unlocked lower lows, but we're not there yet, so don't bother.
for the economy,
Right now, they're just hunting stuff. Stop hunting right now.
projects that the appropriate level of the federal funds rate will be
Don't get too crazy with downside moves. Not yet.
3.4% at the end
This
of
is common.
26 and 3.1%
This is all stop hunting right here.
27. This path is 1/4%.
This is a dealer that knows where you're buying.
As is always the case, these individual forecasts
There's a fucking guy with a button trying to swipe your shit from you. He's like, get out of there, kiddo.
policy is not on a preset course.
Now, if we do begin to trade under here, I will be stopped out, but we're not there yet.
We remain committed to supporting maximum employment, bringing in
I'll try to reposition.
to our 2% goal, and keeping longer-term inflation
Not yet.
expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand
We're holding just fine right now.
families and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Great. Thank you. Chris Rugaber at Associated Press. As you know, Fed Governor Stephen Myron
If they do sweep these lows, you can take puts, but not there yet.
joined the Fed board. This is the first time.
You can take puts for 655
Does this compromise the Fed's
to print 54, but we're not there yet, so don't buy them. There's no point in buying them here.
perception the Fed is politically independent with
They'll eat you alive if you get them.
So,
You'll fuel the upside move, so don't do it just yet.
as we always do,
Not yet.
and the committee remains united in pursuing our dual mandate goals.
Right now, it's just sweeping lows, just trying to vacuum out all these buyers there, trying to sweep out, trying to sweep me out right now, as far as I can see.
I'm sorry. Can you and other Fed officials have spoken extensively about the impact of tariffs on inflation, although perhaps with many companies appearing to eat the tariffs, tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation?
Tell him.
You know, it's certainly possible. You know,
He knows.
we have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large.
That's horse shit. He's lying to you right now. It's a lie.
And we do expect them to.
He doesn't want to say the magic word that we're going into cyclical inflation. He's lying to you. It's not goods. It's services.
And that there may be.
That's horse shit.
Unemployment, but
provable with facts.
That, I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply.
Look at me. I'm down here hiding out. I'm like, get out of my way, man. Get out of my way, bro.
Growth, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply. And to the point where we see what I've called a curious balance. It's, typically when we say things are in balance, that sounds good. But in this case, the balance is because.
Joe, we've got some negative momentum coming down over here. Not quite there yet, but almost.
We now see the unemployment rate edging up.
That's a new low right there.
The Wall Street
on S3. Watch out for a roll here coming up.
Risks no longer warrant a restrictive policy setting.
So I don't think we can say that. What we can say is this: that over the course of this year, we've kept our policy at a restrictive level, and people have different views, but a clearly restrictive level, I would say. So, and we were able to do that over the course of this year because the labor market was in very solid condition.
Yeah, just right there. That's it.
Job creation and all those things. I think if you go back to April and now look at the revised job creation numbers for May, June, July, and August, I can no longer say that. So
still long, by the way.
What it means is that the risks were clearly tilted toward inflation. I would say they're moving toward equality. Maybe they're not quite out of equality. We don't need to know that. But we do know that they've moved meaningfully toward greater equality, the risks between the two goals, and that suggests that we should be moving in the direction of neutral, and that's what we did today.
Watch out for this roll right here.
Would a larger than 25 basis points rate cut be warranted? And how seriously was that option entertained at your meeting this week?
There wasn't widespread support at all for a 50 basis point cut today. I think we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those.
Listen closely to this.
When you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now. I feel like our policy has been doing the right thing so far this year. I think we were right to wait and see how tariffs and inflation and the labor market evolved. I think we're now reacting to the much lower level of job creation and other evidence of softening in the labor market and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now. And so that.
Just watch this here closely. Watch the above right there.
Colby Smith with the New York Times. Should we be viewing today's cut as the committee taking out some insurance against the possibility that the labor market is at risk of weakening? Or is it the committee's view that the dynamics of a downturn are already in place? I guess I'm just trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago with the fact that the forecast for unemployment didn't change.
Yeah, I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market. You've seen, we were looking at 150,000 jobs a month at the time of the last meeting. And now we see the revisions and we see the new numbers. And I don't want to put too much emphasis on payroll job creation, but it's just one of the things that suggests that the labor market is really cooling off. And that tells you that it's time to take that into account in our policy.
So just looking at the SEP, once again, the median participant has inflation higher than previously expected by the end of next year, and the Fed not getting back to the 2% target until 2028. So I guess I'm just wondering how you characterize the risk to price pressures of kicking off a series of cuts at this point.
Yeah, so I would look at it this way. We fully understand and appreciate that we need to remain fully committed to restoring 2% inflation on a sustained basis, and we will do that. At the same time, we've got to weigh the risks to the two goals. And I would say since April, to me, the risks of higher and more persistent inflation have probably become a little less. And that's partly because the labor market has softened, GDP growth has slowed, and So I would just say that the risks there have been less than one might think. And in terms of the labor market, what we're seeing is unemployment is still low. It's still a relatively low rate, but we're seeing downside risks.
Michael McKee from Bloomberg Radio and Television. I'm a little confused by your explanation of the Fed cutting rates because of unemployment. If you think that most of what's happening in the employment area is related to immigration, which your rate cuts wouldn't address, how do you see that as more important than inflation, which has remained almost a full percentage point above your target?
Well, I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing in it due to immigration. You clearly have a slowing in demand, which is now perhaps more than that in supply, and we know that because the unemployment rate has ticked up. So, that's what I meant by that.
If I could follow up. Every year since 2015, the SEP has forecast that you would hit your target 2 years later. And this year, this SEP says you're going to hit your target 2 years later. 2% does not seem to be in sight. Does that suggest that the 2% target is not really achievable? And does this present any credibility problems for you in telling people that that's what you're going to do if you can never reach it?
Well, I mean, you're right. It does say we're going to get to 2% inflation in 2028, at the end of 28. But
that ain't happening ever.
You put the projections together. You're writing down a rate path, which is designed to create over the course of the SEP, time frame, 2% inflation and maximum employment too. So that's all that is. No one really knows where the economy will be in 3 years. But the nature of the exercise is to write down policy that you believe would return to the 2% goal over at least by the end of the exercise.
Thanks so much, Elizabeth Schulze with ABC News. The latest inflation report shows that prices are still going up across key categories for many households, including groceries. What will the Fed do if prices pick up more?
So our expectation, and you can see this consistently through the year, has been that inflation will move up this year, but that basically because of the effects on goods prices from tariffs, but that those will turn out to be a one-time price increase as opposed to creating an inflationary process. That's been our forecast. Pretty much all the individual forecasts say that. We can't just assume that, though, right? We have to. Our job is literally to make sure that is what happens, and we will do that job. Right now, the situation we're in is that we see inflation. We continue to expect it to move up, maybe not as high as we would have expected it to move up a few months ago. The pass-through of the tariffs into inflation has been slower and smaller. The labor market has softened. So the case for there being a persistent inflation outbreak is less. And so that's why we think it's time for us really to acknowledge that the risks to the other mandate have grown and that we should move in the direction of neutral. So what will we do? We'll do what we need to do, but we have two mandates and we try to balance them. For a long time, our framework says that when our two goals are in tension, this is quite an unusual situation. How do we decide what to do? Because our tools can't do two things at once. What we do is we ask which is farther from, how far is each from the goal and how long is it expected to get to the goal. So, and then we think about those things and we see, as I mentioned, our policy had been really skewed toward inflation for a long time, really. Now we see that there's downside risk clearly in the labor market, and so we're moving in the direction of more neutral policy.
How concerned are you about the slowdown in the jobs market for households at home, especially younger Americans struggling to land a job?
So it's an interesting labor market, and obviously we think it's appropriate that we reduce our rates so that we become more neutral, which presumably will be better for the labor market. You see people who are sort of more in the margins, so kids coming out of college and younger people, minorities are having a hard time finding jobs. The overall job finding rate is very, very low. However, the layoff rate is also very low. So you've got a low firing, low hiring environment. And the concern is that if you start to see layoffs, the people who are laid off there won't be a lot of hiring going on. So that could very quickly flow into higher unemployment. In a healthier economy, healthier labor market, there would be jobs for those people. But now the hiring rate is very, very low. So that's been a growing concern over the last few months. And it's one of the reasons why we think it's appropriate that we begin to shift our policy focus toward a more balanced one.
Steve Leisman, CNBC. Mr. Chair, in the past, during rate cuts, you used the word recalibration. And I wonder if you pointedly did not use it this time. And in fact, when you said policy is not on a preset course, did you mean that as sort of the opposite of recalibration? Are we meeting to meeting, data point by data point? Are we in the process here of getting back to neutral? Thank you.
So I think we're in a meeting by meeting situation. We're going to be looking at the data. You know what, let me say a word about the SEP really here. So we often point this out. What the SEP is it's an accumulation of the individual projections of 19.
Listen to this closely.
Showing what they believe at a particular moment in time to be the most likely path for the economy and thus the appropriate path for monetary policy as well. And as you know, we don't debate or try to agree on what that is. We just write them down and accumulate them. We do sometimes discuss them. And so we always say we're not on a preset path, and we really mean that. The actual decisions we make are going to be based on the incoming data, the evolving outlook, and the balance of risks at the time the decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or more cuts for the remainder of the year, and 9 who wrote down fewer than, in fact, in a good number of cases, no more cuts. So rather than looking at this as certainty, I would encourage people, as always, to look at the SEP as through the lens of probability. And so there are different possible outcomes and likelihoods rather than this one is certain and this one isn't happening. So that's what I would say.
Thank you for getting to my follow-up question, which was, is the dispersion in the outlook a sign of uncertainty of policy in the meetings to come? Thank you.
You know, it is such an unusual situation.
Yeah, he's not confirming a cutting cycle right now.
And when the labor market is really strong, that's when you got to be careful about inflation. So we have a situation where we
keep saying this,
and that means there's no risk for.
This is going to make fucking Trump snap and Besant.
Situation for policymakers, and it's not at all surprising to me that you have a range of views. It's not so much about having different views for the path of the economy, but it's partly that. But it's also partly about what's the right thing to do in light of this. Of the tension between the two goals. How do you weight them? How worried are you about one versus the other? And so it's natural. I think it would actually be surprising if you didn't have a pretty wide range of views based, in this kind of highly unusual situation, and we do. So, but we get together, we discuss, we have a great discussion, and then we decide what to do and we act. But you're right that it's a wide dispersion of views, and I think that's understandable and natural in the current.
I think the gamma flip's there. It's there or here. That's right there. I think that's where the gamma flip is. I'm not positive, but I think it's right there.
You've talked a lot about Fed independence and the importance of it over the years, but as markets have questions about what exactly
big puts rolling in now, 660.
What would you point to as the things they should be watching to determine that the Fed is still making decisions based on the economic outlook rather than
right there?
Look, it's deeply in our culture to do our work based on the incoming data and never consider anything else. That's just everybody who's at the Fed really feels strongly about that way. So, you'll know it by the way we talk about what we're doing, by the speeches that people give, by the decisions that we make. You'll know that we're just still going to do that. That's all we do. And we don't frame these questions at all or see them in terms of political outcomes. I think when you get to another part of Washington, everything is seen through the lens of does it help or hurt this political party, this politician. That's the framework. And I think people find it hard to believe that that is not at all the way we think about things at the Fed. We're taking a longer perspective. We're trying to, serve the American people as best we can. So I think you would be able to tell. I don't believe we'll ever get to that place. I would say we're doing our work exactly as we always have now, and they're making their arguments, and we're having really a great discussion around these challenging issues. So,
do you see the court case around Lisa Cook as being related to questions of Fed independence?
I see it as a court case that it would be inappropriate for me to comment.
Yeah, don't make any comments on that. Don't talk about it. You've already pissed him off today. He's raging, right? You know that Trump and Besson are raging right now, 100%. They're fucking pissed.
11,000. The revisions for June were the first negative revisions we've seen since December of 2020. How can the Fed base important decisions on rate and what to do with the interest rates on data that seems to be, as you've called it in the past, noisy?
So on the QCEW, the revision that we saw was almost exactly what we expected. It was amazing how close the expectation was. So, and the reason for that is, for the last bunch of quarters, there's been almost a predictable overcount, and I think the Bureau of Labor Statistics really does understand this, and they're working hard to fix it. It's got to do, of course, it has something to do with low response rates, but it's also got to do with what's called the birth-death model, because a good amount of job creation happens around new companies and how many go out of business, how many are founded, and it's just really hard. You can't survey for that. You've got to have a model that predicts that, and it's quite difficult to do, especially when the economy is undergoing big changes. So, and they've been working on that and are making
gap's a little bit lower than where I drew it. It's not perfect between SPX and SPY.
Well, good enough for us to do our work. To the extent we have issues around data right now, it's about low response rates. That's happened all over really. Response rates are just lower to surveys now, both in and out of the government. And it's no great secret. We want higher response rates, and we need those to have, less volatile data. And the way to get that is to make sure that the agencies that collect the data have sufficient resources to drive higher response rates. It's not a complicated problem, but that's what it takes. It's not a mystery. That's what it takes. The other thing I'll say, Edward, is in the case of the job creation, the response rate is quite low for the first month, or lower for the first month. By the time you get to the second or third month, you're still collecting responses for that last month, for that prior month, and you get to the place where the data are much more reliable by the second and certainly the third month. So it's not that we don't get the data, it's just that we get it a little later.
But for the benchmarks, if that holds, it's 51% of the jobs that we thought were there weren't really there. It shows a weaker job market coming into this year. If you had had that information, would it have changed your mind related to where the interest rates should be? Should there have been a cut earlier?
We have to live life looking through the windshield rather than the rearview mirror, as you know. And all I can tell you is we see where we are now, and we take appropriate action, and we took that appropriate action today.
Thanks. Howard Schneider with Reuters. So as you mentioned a minute ago, some margins of the job market would suggest that the slide's already happening. Black unemployment rate in August was above 7%, declining work week, difficulty among college graduates finding work, rising youth unemployment. Why do you think a quarter percentage point now is going to arrest that?
Well, I didn't say that I thought a quarter point would make a huge difference to the economy, but you've got to look at the whole path of rates, right? And the market's has already been baking in expectations. I mean, our market works through expectations, right? So I think our policy path really does matter. And I think it's important that we use our tools to support the labor market when we do see
659.
You see minority.
If they are going to go down, it's going to be right in here.
People who are more vulnerable economically, more susceptible to economic cycles. That's one of the reasons.
Sorry, this is all wonky as fuck.
Overall, lower payroll job creation.
Watch out for another rejection up here. We're not quite out of the woods yet.
Would also point to labor force participation. Some part of the significant decline in labor force participation over the last year has probably been cyclical in nature rather than just the usual aging process. So we put all those together, And we see that the labor market is softening, and we don't need it to soften anymore, don't want it to. So we use our tools. And, it starts with a 25 basis point rate cut. But
they're trying to get him to say he's on a cut path, but he refuses to say it.
The market's doing it all. I'm just saying it's not just one action.
As a follow-up to that, the growth mix right now seems very concentrated in investment and on the consumer spending side in the higher income groups. Do you feel that that's an unsustainable mix for the economy moving forward?
I wouldn't say that. I mean, you're right. Those are two. We're getting unusually large amounts of economic activity through the AI build out and corporate investment.
Fuck, did I pick up 665?
I don't know how long that will go on. No one does. In terms of spending, you saw that the consumer spending numbers were well above expectations, and that may well be skewed toward higher earning consumers. There's a lot of anecdotal evidence to suggest that. Nonetheless, it's spending. So, I mean, I think the economy is moving along. Economic growth is going to be 1.5% or better this year, maybe a little better. Forecasts have been coming up, as you can see. So, labor market unemployment is low, but downside risks, but it's still a low unemployment rate. So, that's how we see it.
Hi, Stephanie Rule, MSNBC. Treasury Secretary Scott Bessent has said that the Federal Reserve suffers from mission creep and institutional bloat. He's now calling for an independent review. Would you support an independent review, or are you open to any sort of reform in any areas of the Fed?
Of course, I'm not going to comment on anything the Secretary.
No, you can't comment on this. He's already said fucking publicly that he's open to reform. He's always said that. He's explained. We're gonna talk about this later right now because this is fucked up.
Of updating our
mission creep my ass. Fuck off with that bullshit. And she knows this. I want to talk about this in a little bit when we're done with this bullshit.
The assets we have in the Federal Reserve Bank system.
Kick her ass out of that fucking. Get her out of there.
Right size. We're actually going through a 10% 10% headcount reduction through the whole Fed, including the board and all the reserve banks. The employment at the Fed at the end of that will be basically at the same level it was more than 10 years.
She's a fucking politico. Not politico, but like she's a politician's. Fuck her. She can fuck right off.
So I think we're certainly open to constructive criticism.
There we go. There we go. Back up again.
Not an independent review?
There we go.
Certainly open to, Dude,
it's so.
Always trying to do better.
So that question and those questions are geared towards Bob on Main Street, but have nothing to do with the collection of data, how it's collected,
demand, higher productivity by contrast,
why it's collected the way that it is, how it's collected.
True. Does that have a
You can change that? Trump can.
So there's great.
Trump can. The fucking Republicans can. All they got to do is pass a law and make it mandatory for businesses to report in a timely manner with fines.
But it's not.
And it'll be over. They ain't going to do that. That's horse shit, what she just said.
Coming out of college.
I'll explain this later. That's hyperbolic bullshit.
Or other institutions that have been hiring.
Oh, yeah. Get back up there, bro. Get back the fuck up there. Get back up there.
AI bet more than they had in the past. That may be part of the story. It's also part of the story, though, that,
We're talking about this after this fucking show, because before you guys leave, I want you guys to understand the truth.
A number of things, but yeah.
Which most of you probably do not understand. Just a note here, it's 5 o'clock, or it's 5 o'clock. It's 3 p.m. right now, power hour.
Thanks, Mr. Chairman.
This should end soon. This normally doesn't last that long.
Showing up in inflation.
Well, if you can take good.
There might be one more leg down here, but I'm not sure yet.
Last year.
Could be one more leg into the close over here at 1600, but not sure yet.
Thing was it good?
It's not confirmed yet.
Goods prices generally went down, even adjusting for quality.
God, that's so much fucking.
During the pandemic.
He shouldn't have even answered her. He's being really nice right now.
Turn to 0 or slightly negative inflation. Now, I think goods inflation over the course of the past year is 1.2%.
Pain in the like. Listen to that. Some of these fucking reporters. It's like,
I mean, analysts have different views, but we think it's contributing, 0.3 or 0.4.
There's 1,600 right there.
Core piece.
There could be some grinding. That watch this upside thing right there. Could be a little bit of like just grinding in here. It's possible. Just grind. There might be one more low, but I don't.
Tariffs are
I don't think so.
Mostly not being paid by exporters. Mostly being.
We don't have it confirmed that grinding over here. So
companies that sit between the exporter and the consumer. So if you buy something and you sell it through retail or you use it to make a product, you're probably taking a lot of those costs on and not able to pass it fully along to the consumer yet.
I'll explain this like process thing and how the data is collected, how it's reported.
Those companies and
when you hear it, you'll be like, "What the fuck? Seriously?" Yeah, that's how we report. We record data.
To the consumer, the pass-through has been.
Now you can change how you record data, but the only way to really truly change it, would be the fucking Congress and the president signing off on that change.
I also wanted to ask,
because everything is basically voluntary right now.
the conditions under which you might consider.
Basically, you're supposed to report this shit, but most people don't.
I have nothing new on that for you.
Or they forget about it, or they never get to it.
Hi, Katerina Saraiva with Bloomberg News. I just wanted to.
There's a bunch of horseshit in this.
One of your answers just a couple minutes ago. We've often heard you talk about how you and your colleagues, do not think about politics. This does not enter the room.
Fuck no, that's not their job, dude.
One of your new colleagues does come from this world, right, where everything is seen through this framework of politics and.
Watch out for a squeeze.
And that person is still employed by the White House. How can markets and the public interpret, some of his speeches, for example, and then some of, the forecasts that we see today? I mean, the median for this year was moved because of the.
Watch out for a squeeze out there if you're short.
I'm talking about the number of rate cuts seen this year. What do you say to markets and the public that are trying to interpret, what you guys are saying?
So there's 12 votes.
She's pretty good. This reporter's pretty good. She's not trying to,
on a rotating basis. So no one voter, can really.
She's being a little neutral here, even though she's saying, shit that.
Persuasive, and the only way to do that in the context in which we work is to
watch out for a squeeze.
Strong arguments based on the data and one's understanding of the economy. That's really all that matters, and that's how it's going to work. And I think that is the way the institution. That's in the DNA of the institution. That's not going to change.
And then I wanted to ask about a Gallup poll that showed that Americans now have more confidence in the president than the Federal Reserve when it comes to doing what's right for the.
It's kind of cute too.
Why do you think that is, and what's your response? What's your message to the public?
Our response is we're going to do everything we can to use our tools to achieve the goals that Congress has given us, and we're not going to get distracted by anything. So I think that's what we're going to do. We're just going to keep doing our jobs.
Claire Jones, Financial Times. Given the range of views expressed prior to the meeting, I think there was a lot less dissent today than a lot of people expected. It'd be good to know just what you think the drivers were of coming to that very strong consensus in the meeting, and also on the flip side to just explain why the dot plots are really so scattered between, someone even expecting rates to end up higher by the end of the year to 5 cuts.
Gambling, woman, gambling. That's why.
On one side, why there was so
fucking gambling.
And on the flip side,
if Jerome said that, I would laugh my ass off. It's gambling. That's why. It's gambling.
A wide assessment that the situation has changed with respect to the labor market. Whereas we could still say, and did say in July, at the time of the July meeting,
squeezing now.
And we could point to 150,000 jobs per month and many other things. I think that the new data that we've had, and it's
there we go. There's my money back. Give me my money.
That they're really.
Give me my money.
I said there was.
Give me all my money.
But I think that downside risk is now a reality, and there's clearly more downside risk. So I think that's broadly accepted. And so that meant different things for different people. Some wrote down, almost everyone wrote down, supported this cut. And some supported more cuts and some didn't, as you will see from the dot plot. So that's just the way it is. I mean, people have, you have people who take this work very seriously, think about it all the time, do their work, discuss it with our colleagues. We endlessly discuss this between ourselves, and then we have a meeting where we put it all out on the table, and this is what you get. And you're right, there's a range of views in the dots, and I think that's, like I said, very unsurprising given the quite unusual, historically unusual nature of the challenges that we face. Let's remember, though, the unemployment rate's 4.3%. The economy's growing at 1.5%. So it's not a bad economy or anything like that. We've seen much more challenging economic times. But from a policy standpoint, the standpoint of what we're trying to accomplish, it's challenging to know what to do. There are, as I mentioned earlier, there are no risk-free paths now. It's not incredibly obvious what to do. So we have to keep our eye on inflation. At the same time, we cannot ignore and must keep our eye on maximum employment, which is those are our two equal goals. And you will see that there are a range of views on what to do. Nonetheless, we came together today at the meeting and acted with a high degree of unity.
Thank you. Archie Hall from The Economist. You mentioned earlier that job creation was running below your guess at its break-even rate. I'd be curious to hear a bit more about that and where you think the break-even rate is.
So there are many different ways to calculate it, and none of them is perfect. But it's clearly come way down. You could say it's somewhere between 0 and 50,000, and you'd be right or wrong. I mean, there's just many different ways to do it. So wherever it was, 150,000, 200,000 a few months ago, it's come down quite significantly. And that's because a very lower amount of people are joining the labor force. The labor force really not growing much at this point. And that's a lot of where the supply of labor was coming from over the last 2 or 3 years. So we're not getting that now. We've got much lower demand. It's interesting that supply and demand have really come down together so far, except now we do have unemployment ticking up outside, just one tick outside of the range where it's been for a year. 4.3% is still a low level, but I think this speedy decline in both supply and demand has certainly gotten everyone's attention.
I'll follow up if I may. You mentioned the downside risk to employment a fair amount, but it's striking that measures of kind of activity and output for the third quarter, those that we have, seem pretty strong. The Atlanta Fed's GDP now is very strong. You mentioned strong PCE numbers as well. How do you square those things? Is there a chance actually could be upside risk to the labor market if those activity measures are right?
Well, that would be great. We'd love that to happen. So I don't know that you see a big tension there, but it's gratifying to see that economic activity is holding in, and it's a good bit from consumption. It looks like consumption was stronger than expected, what we got earlier this week, I guess. And also we're getting, a fairly narrow sector is producing a lot of economic activity, which is the AI build out and, business investment. So, we watch all of it, and I would say we did move up. The median for growth for this year actually moved up in the SEP between the June and September SEPs. So, and really the inflation and labor market didn't change much. It's really the risks that we're seeing to the labor market that were the focus of today's decision.
Nicole. Hi, Nicole Goodkind with Barron's. Thank you for taking my question. Given the cumulative impact of high interest rates on the housing sector, I'm wondering how concerned you are that current rate levels are exacerbating housing affordability issues and potentially hindering household formation and wealth accumulation for a segment of the population?
You know, housing is an interest-sensitive activity, so it's at the very center of monetary policy. When the pandemic hit and we cut rates to zero, the housing companies were incredibly grateful, and it was really, they said that was the only thing that kept them going, was that we cut so aggressively and provided credit and things like that, and they were able to finance because we did that. The other side of that is when inflation gets high and we raise rates, and you're right, it does burden the housing industry, and so rates have come down a bit, and as that happens, we don't set mortgage rates, but our policy rate changes do tend to affect mortgage rates, and that has been happening, and that'll of course raise demand. Lower borrowing rates for builders will help, builders will help supply. And so some of that should happen. I think most analysts think that it would have to be pretty big changes for it to matter a lot, big changes in rates to matter a lot for the housing sector. And the other thing is by achieving maximum employment and price stability, that's a strong economy. That's a good economy for housing. And then the last thing I'll say is, there's a deeper problem here. There's not a cyclical problem that the Fed can address, and that just is a pretty much nationwide housing shortage. Or a lot of places in the country just don't have enough housing for people, and all of the areas around metropolitan areas like Washington, for example, are very built up, and so you're having to build farther and farther out, and so that's where it is.
And just a quick follow-up. During the last SEP, or the press conference following the last SEP, you seemed to indicate that policymakers lacked conviction about their projections, and I'm wondering if you still feel that way.
Forecasting is very difficult even in placid times, and as I've mentioned before, forecasters are a humble lot with much to be humble about. So I think right now is a particularly challenging time, even more uncertain than usual. And so I don't know any forecaster anywhere, really. Ask any of the forecasters whether they have great confidence in their forecast right now. I think they'll honestly say no.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. If you're cutting rates, why continue to reduce the size of your balance sheet, then pause the unwinding?
Well, I think we're cutting the size of our balance sheet quite marginally now. As you know, with the balance sheet, we're still in an abundant reserves condition, and we've said that we would stop somewhat above an ample reserves level. That's where we are. We're getting closer to that. We're monitoring it very carefully. We don't think that has at all significant macroeconomic effects. These are pretty small numbers moving around inside a giant economy. The level of runoff is not very large. So I wouldn't attribute macroeconomic consequences to that at this point.
And at his recent confirmation hearing, Stephen Myron brought up that the Fed actually has 3 mandates from Congress, not just jobs and stable prices, but also moderate long-term interest rates. So what does Congress mean by moderate long-term interest rates? How should we understand that when we see the 10-year Treasury moving? And how do you think about this part of the mandate when policy choices like rate cuts or balance sheet reductions affect the long end of the yield curve?
So, we always think of it as the dual mandate, maximum employment and price stability, for a long time, because we think moderate long-term interest rates are something that will result from stable inflation, low and stable inflation, and maximum employment. So we haven't thought about that for a very long time as a third mandate that requires independent action. So that's where that is. And there's no thought of, as far as I'm concerned, there's no thought of considering that, considering that we somehow incorporate that in as something in a different way.
Thanks, Chair Powell. Matt Egan from CNN. We recently learned that average FICO credit scores are down this year by 2 points, the most since 2009 during the Great Recession, and delinquencies are high for car loans, personal loans, credit cards. How concerned, if at all, are you about the health of consumers?
We're in the back end of the reporter pool.
So,
Jerome, do you like Tostino's pizza or Gino's pizza? Do you like the square frozen or the round ones?
They're not at a level, I don't believe they're at.
Pay attention to this over here. They could sweep these lows again at the close, but probably done.
Lower rates should support economic.
Just a warning to you.
One rate cut will have.
I haven't seen anything yet that says we're going to do the downside into the end of the month here. This looks like upside. So
is what we're.
If you're looking to get long into like Thursday close Friday or Friday close or end of month, this is one of your chances right now. Unless something changes here. These fucking dealers are down here opening that whole trade up right now. Remember, you got dealers down here too that are supportive. We're like grace, like right at the bottom where you dip by right now. I posted a chart for SPX this morning on places to buy the dip here. Everything looks great right now. Market's moving really fucking fast. We're just waiting for an MOC close. We're just waiting for an MOC close of like I think 1.5 billion.
Very, very careful.
And then we're gonna lock in the fucking trade for the rest of the week in the next 1 to 3 days. So just waiting for the MOC close numbers, and it's gonna be rock and fucking roll. We're going up, baby, as of right now.
And I know that
we're going up. So when I told you earlier about hair on fire,
from a financial,
oh my God, it's gonna crash.
That picture.
Oh my God, I want to buy the top. Oh my God, it's gonna crash. Oh my God, I want to buy the top.
For any particular financial asset, but we monitor the whole picture.
And we're blowing off volatility. We're blowing off negative gamma on a 30-minute chart right now, and on hourly. We're blowing all that shit off right now, rolling it all off.
Hi, Chair Powell.
You better have a fucking reason for us to crash in the next 2 days, because you better write me a Bible. I had to read that shit off to you this morning, and then at the last minute tell you we're going to moon.
Gone up a little bit. I wonder if you can talk a bit about.
So I'm telling you now.
So at the long run,
You get what I fucking always tell you guys.
that the
Risk the fuck on when you're scared.
deficit is putting pressure on inflation expectations.
Oh yeah, I think we moon on Thursday bell at the closing bell on Thursday, and then we dump. In my view, we dump the fucking market, but it could take till Friday. I've got Friday calls just in case.
Just a little while to get
down.
Fortunately,
underperform more time. But I think we'll do it before Friday open. All right, I think we'll do it into Friday open and then dump. Because you guys understand this, right?
Have been just rock solid.
I buy a bunch of SPY. Right here,
running at levels that are consistent.
What do I get on Thursday close? What do I get on Friday morning?
We actually
tell me.
That our actions have.
Tell me, what do I get?
And that we need to.
I get $2
show
$2 extra $2. So this 5.59 will print me an extra $2. So
you'll hear us doing that
on Friday open. I can dump it.
But
bye bye.
Difficult situation because
I got my $2. Suck it.
Both affecting the labor market and
I get to collect the dividend. Yay, fuck you. And meanwhile, you've got
risk we have to balance.
You got all these theta guys, and they don't want to see that. Like they're trying to get out. They don't want to see a Friday close where they're dumping shares or not dumping shares. They're opening up or selling options on. So they're always like afraid of that Friday close, but so they'll like panic into like Thursday close, then Friday morning they'll be like, woo, so close, bro. All right, hold on here, guys. Hang tight here. So this is a good day. This is an outstanding day. Let me turn that off real quick. Let me go to a main. Can I go to a main thing here? So a few things here. If you're a member of our community, or if you're a community member, I'm going to do a private stream later today. We're not done here. Hold on here. We are looking for, Trader Podcast. Our homeboy, our mentor, our fucking one of our leaders, one of our trusted members. We're just waiting for an MOC close to find out what if it was a buy or sell side. and that would seal the deal for, on our view, this big upside move into Thursday, Friday open. Now we've got a SPY dividend on Thursday. If you're an owner of SPY, listen closely here. Listen closely if you've got a lot of money and you are not a dumbass. If you own SPY and the record of close, I believe, unless I'm wrong here, on Thursday close, you will be gifted with, I think this right now it's about $1.80, $2 somewhere in there. I haven't checked recently, but I think it's roughly in there, $1.80. I think that's what it is. But you're like given free fucking money for holding something for what? A few hours. When does that trade normally take place? Well, it's going to look like it's going to crash normally at like 2:30 in the afternoon on Thursday. If it happens, it's going to look like the market's going to dive. And you're going to fucking think that. And instead, these fucking hedge funds are going to come in and just buy the fuck out of it. And they're going to hold that shit right into 9:30 in the morning. They're going to dump that shit right in the market on Friday. And we got OPEX on Friday, don't we? We got OPEX. We got tons of OPEX. We got OPEX Friday. Right? We're pinned in, aren't we? So we'll go to that pin on Friday. Right? Yeah. Yeah. No, we're going to do a scare Theta Gang. Theta Gang is going to be like, oh, God, it's going to be awful. Oh, my God, I got to roll higher. They're not rolling higher. They're just going to be fearful. They're going to freak out. They're going to come out and yell at you. And then as soon as it rolls down off of that high, they're going to be like, no, don't worry about it, bro. Everything was fine. Your Theta Gang friends are going to probably disappear for like 12 hours. They'll go missing. Like Thursday, 2:30 until like 9:30 on Friday. They'll be like, woo, I'm safe. And they'll do the same shit again the last day of the quarter. More than likely, be freaking out watching the green bar go straight the fuck up. At this point, if anything changes, I'll let you know. Nothing's changed yet. Everything looks good. Everything is like how it should look. Like with it, like rhyming and shit. Like, yeah, it's kind of ramming. This is kind of ramming. So it looks good right now. Whenever you see this fair, man, telling you what, then we might go sideways and down a little bit here. They could try to grind this out a little bit into 6, but don't be sweating this. Don't be sweating this. If they don't grind this down, we could trade higher into Thursday about 2:30 in the afternoon, and you're gonna be like, oh my God, there's a big bear flag there. It's gonna come down. It's been growing since fucking Wednesday, and they're gonna tell you all this doom and shit and whatever, and they're like, oh God, it's gonna crash. And it'll even look like it's gonna crash to me. I'm like, ah, fuck no, get out of this, guys. We're going to burn Friday down and Thursday down. That's what it'll look like. But you got to go against that. And it's a fucking trap. I'm telling you. It doesn't happen every time. That shit happens a lot at DivX. Like edge a lot. Like 7 out of 10 times a lot. So we'll watch it closely here. Tomorrow. Yeah, nothing ever happens. I know. Woohoo! Congrats, Winky, on the money. No, so I'm long here, right? If we gap up into Thursday, Friday close, I'm going to sell. And I'm going to go risk off on Friday. And then I'm going to try to come back on Monday or Tuesday. And I'm going to try to ramp this fucker again into the end of the month. Now, if we slip down and below, let's say on Friday, we'll just show you guys something here. So like, let me just show it to this really quick. Okay, so let me get rid of all this. Okay. So I'm going to leave you guys with something if you're a free member, okay? We are a collection of traders in here. Oh my God, look at that fucking dip. It was so beautiful. So here's just give me a second here. What this could look like is this. Oh my God, we're so far away from all-time highs. Oh my God. What this could look like is this. Let me turn the squawker back on here. Okay, so what this could look like is this. Don't Don't be like, hey, Cop, it didn't do that exact same thing. Don't tell me that shit. I want to hear it from you. Okay? Rhymes, looks like, smells like, talks like. So here's Friday, okay? So what this could look like tomorrow would be...
Racing 1.1% decline.
Oh, fuck yeah, baby. Could look like something like this, and then this, like, fade. And it's going to look at, like... It could look like 230, like it's going to jackknife down, right? And you're like, yeah, there's 1, 2, and 3, bro. What's really going to happen is... You're going to go up there, and you're going to be down here, and like 2:30 in the afternoon, it's going to be fading, like, fast, like, oh my God, we're losing everything, like, just dripping. And then it's going to go just like this. And then you get your dump. And this right here is where they're capturing the dividend off of a SPY. There's another one for VU on 9:30, and that one sometimes works too. So we'll try to trade that one later on. But a couple things here before we go. First of all, thank you for joining me today. Our Discord made money on the first pump, and they loaded the fucking boat on the second down. So ready? Our Discord bought this right here. Wham! They got out, and then they started adding some 0 dates to Friday calls. So let's talk about expectations. You guys want to do some expectations? If you're just joining me, I do these every day at the end of the day. Every day I give you a preliminary. If it changes drastically, I'll write you a brief and say, something's wrong, something's fucked up in the overnight. No crystal ball for the overnight. You know what I mean? But let's talk about this right now. Ready? Let's talk about an expected move for the rest of the week. I hope the fuck you're all along. I'm going to make you rich between now and Friday, okay? All right. We're going to start right here. We talked earlier about Thursday and Friday, okay? Let's look at Thursday and Friday real quick. This is Thursday. We've been talking about this all week, right? Since Monday we talked about this. There's Thursday. There's Friday. Right? And they swept this low right here. Do you see this? But they didn't take the whole candle, did they? So these fucks are still long. They're still long. In this group right here, on Thursday, Friday, sometimes you'll come into a Monday, Tuesday, they'll sweep that low and then ramp into Friday. Now, they didn't do that, did they? Last week, they didn't do it either. So what they did was they came up, make some money, come back down here, sell it down, and they're still long. And now they're going to ramp this fucker up again into Friday. As of right now, it's all we know. That's all I know. This is a good chart. This is beautiful. This is shit mountain. We're on poop mountain right now. It's great. And you have a wick. Look at that fucking wick right there. It's beautiful. What does David Amos say? Wick does the damage. Candle tells you the story. Candle tells you the story. What is the upside wick? What is the upside wick here? Upside wick is right here. We took that candle. That means the implication is up. That's the implication. So, what are we looking at right now? If you had to look at this chart right here, you never wiped out these buyers. They're still here. Right here. They're still right here. Still right here. You did wipe out most of these sellers. You took all their stops. Right? So right now, the impetus is on the sell side. That we're going to go up, up, up. So let's take a look here. We're going to delete all this. Look at that big green candle. Woo! Woo-hoo! Or wick. What's a big green wick mean? Bye, 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 bye. We're going to go to a 4-hour here. We know where we can hold or not hold, or we're wrong for next week. I can actually tell you something about next week here, too. So watch this closely. Right about here. Right about there. Remember this white line right here. This will matter on Friday close. And then a new white line next. If we can't get underneath it, we'll raise this up for next week. And this will decide if next week. So this is Friday. So if we do like the bullshit down here, we can sweep right up here on Friday or Thursday, right? And then and then if we don't come down and below this on Friday close, that will imply that we'll come back here, have a new white line, and we'll make our way up. I don't think that happens, but that's the implication. If you don't get what I'm saying, I'll show it to you later. For right now, for today and tomorrow, and then Friday, watch this white line, okay? It's sitting on 653.99 right now. Could be a little bit higher, but I like this is fine. Right about here. I'll put it a little bit lower. 653.71. Okay? Close enough. 653.71. Bulls must stay above. That's all you need to know. That's it. It's that simple. Oh, nope. Hold on. That fucking simple. Not rocket science. It's all you need to know between now and Friday, and then on Monday. It's real, and this white line will move higher on Monday. God damn! What a fucking sweet buy. All right, we'll calm down here. We got this one right here. God damn, I'll take that fucking thing every time. But that one right there. And we got this one right here. And we already broke through it. We already broke through that fucking thing. It is gorgeous. Look at all that buying, man. 4 hour. 4 hour. 4 hour. Oh, we're going to get a day candle in here too. Sweet, sweet Jesus. We're going to get a day candle in here too. See if it's already popping up. Nope. Almost. Not quite. We're going to get a day candle in here. Oh, yes. There's a day candle right here. See it? One right there. Closing the fucking door on these fucking sellers. Right there. Oh, yeah, that's a nice level right there. Look at that level. Ooh. Put that the big D in there. The big D. Detroit, Michigan D. We just have to hold this right here. Oh, another day right there. There's another. They fucked it up there too. They weren't able to get it down there. They were trying really hard. Didn't happen. Put that one right there. Yeah, it's amazing. Look at that. Oh my God. Yeah, I wouldn't be fucking with that. Would you? Fuck no. Look at that. You got some work to do, Bears. Now, this is very probable. Just need to somewhere in there. Or not, wrong way. Not probable, but we can go way down here and still go right up there on Friday or even Thursday. Up there on Thursday. So we're going to go to a 1 hour now. We're going to look right here. Now we're talking turkey here. We got some shit to work with here. Don't we? We got a cluster of buyers. We got a big fat wick right here. Bulls must stay above this just till Thursday. That's it, just till Thursday. That's it. We're going to look for a target on Friday at 1600. We're also going to look at Thursday Oops, sorry, I got the wrong dates here. Hold on. Hold on 1 second here. Thursday, 1600, right here. Friday, 1600, right over there. Wrong way. Right there. All right, awesome. There we go. Buy Doom. Did it. Bought this, ready to rock. Let's do it. Close that up. All right, now let's look at velocity. Let's see if we burned off any of this velocity. Remember, we're burning off volatility too. We do this every day for you. Every fucking day. Free. 30-second chart. That looks good. I like that. Almost there. Not quite. We can see some more lows. Some more lows are possible down here. Then we want to see that big old ramp. See it? Whoop. We'll show it to you here. See it right here? See it right there? Ramporama. Okay? Right there. Go right down there. Right in there. Ramp-o-rama, baby. One week. Okay. There we go. There we go. Time is it right now? 3:40. I got time. Hang tighter, guys. Let me bring this down. Sorry to turn this down. I just want to be people to be able to see this. We've got the high. Our prior high right there. What is that? 662, 664 and a half. About there. You're going to get some sell side action there. Right there. Okay, this is the expectation right here. Now, pay attention here. This is either price or time. You have all the way into Friday to do this, okay? So I'm gonna push it to the right over here just in case it takes that long. Okay? We're gonna get right over that too. Where's 665? Right here. Oh, bring that down. Thursday. Is this Thursday? This Friday. Friday, 10 a.m. Right here. 10 a.m. About there. This is 1600. Yeah, right up there. Just like that. Now, I think it happens before Friday. I think this actually takes place like right here. I think we're going to go. So what's today? It's Wednesday, Thursday, right there. Basically pop the top. Let me just check this. Do this one there, that one there, and then Rampo-Rama. That's what I think happens. But we're gonna give you some time. If you're looking for a dip buy in here, if you're looking for a dip to buy in here, this is the close. 1600, right? If you're looking for a dip buy in here, somewhere down in here. You can buy that too. So Thursday, 2 o'clock in the afternoon, 12:34, right in here. This could take like all fuck. I'm not going to draw this in. Hold on. I want to warn you of one thing in this, okay? Fuck, I should just do it for Thursday, but whatever. You could see like grind, right? And then like 2 in the afternoon, whammo. Yeah, they could try to burn you on Friday, but then do the rest on Friday close, but I don't think so. I think they're going to do, my thought here is, I'm just going to do it the right way. Hold on here. I'm going to do it the right fucking way, right here. That the close. Fade this whole fucking day. Then right up there. That's what I think we are, right there. Where's 12 o'clock? Thursday, 5, 6, 7, 8, 9, 10, right here. And then 2 o'clock. Right there. That's what I think happens. It goes fucking vertical. Forget Friday. We'll come back to this later. Talk about that later. Right up there. 12 o'clock. That's what I see happening. Right there. There's your dip right here to buy if you get a chance. Now, I will say to you that this could be Friday, so put more time on it. The one thing I will say to you is this. I will say this. You need to watch closely. You need to like watch this closely because let's say we do this up here, okay, on Thursday. If they start fading us down into the Friday close, I would be wary of next week. It'll still come up into the end of the quarter, but I'd be wary of the downtrend. But we're not there yet, so there's no reason to. If we go up here, so we go up here and ramp this shit, right? Fade this, and you start seeing like ramping into Friday close. We're going to be looking for 670 will fit. What we'll do is we'll go up here on Monday. I should rephrase this. Let me move this over. So if we go up, right? There's 2 ways this happens. You go up here and do this, right? If you hold this into Friday, they could pop us up and literally like rainbow us. Or they can take us down here and we can ramp it. Whatever we don't want to see this action. If we just see that price action, there's no trade into the end of the month. None. I hope we don't do that. The trader's way to do this would be nope. If you get this pop up here on Monday, you'd be waiting on like Tuesday, Wednesday. And this would be a call spread into the end of the month. They're going to grind you down or up. It ain't going to matter. It's going to be grind here or grind here. Now, if we do slip below over here, let's say we like slip down here, okay? Oh my God, it's terrible. Don't buy anything. They'll grind you here the entire time, and there should possibly be a ramp-o-rama into end of month, and then a big old red bar down. And this is when we get bearish, in my view. I don't think you get bearish here. Like bearish, like we're going to roll it down and have October. I think we have to wait for it. I think there's still like, I don't think it's that easy for, I don't think it's that easy for bears. I think you could go down here. Let's go down here, right? And then I think they're going to fucking buy it up again on you into the end of the month.
1 minute to go to begin.
And then you're going to get those negative flows, you know, those negative the JPM flows, big fat red candle. The daily trigger will be above. And then you can start the cascading down. So for me, at least, I'm not on like the crash here. We're in a vortex. It's not like a lot of people say it is, but we are in a vortex. And I don't like the idea of being in that vortex. Let me talk to you guys real quick here. Let me explain something to you, okay? When you hear the meme that it's when you hear the meme that's like you know, if there was World War III, the market would stay on track and not crash. That's true. Normally it's because of OPEX, and more particularly quarterly. It's not so bad monthly. You might wait the end of the month and then they'll roll it.
806 million.
But Wall Street never fucking loses.
406
so
million. Down first, sell side 17.
There's a
million,
very
Mag 7 buy side 169 million.
I gotta check that really quick. One of the real things you gotta be concerned about here is, like the vortex thing is real, but it doesn't necessarily mean like everything gets sucked down to zero or whatever. It can, but where we are right now in price, it more than likely doesn't happen until they're done with their trades. They like, you gotta remember this, like big fat elephants. They have to like wrap their shit up, and then they can shift to a new thesis. So we could drag sideways and down or fade, but even on that last day of the month and the quarter, we'll likely like super ramp up. If we're way higher, we'll super ramp down into it. So my only thing that I would say to you out there, if you're a bear, is it's hard. It's hard for the market to unwind this fast. They'll likely stay the course. They'll look at everything that was said today. They'll compare notes, I kid you not. And then they'll come up with a new plan for the next quarter. And you'll see that unclench that you're looking for. I don't see it today. Maybe we get it on OPEX or on Friday. But you know, on Friday we could get it on OPEX maybe for the last week, like a weekly doom trade, but we're not there yet. So I think it's unwise at this point to be, you know, you get some of that gamma coming off on Friday. Could do that unclench to get us underneath the lower path. But I don't think it's today, and I don't think it's tomorrow. And I would want that if I was trading the downside. I would want that ability to start moving freely. This does not look good right now. This does not look productive for that bear thesis at this moment. It can be, just isn't at this moment. As of yet. So if it was me, I would be looking for the next trade to 660, which is, let me show you that really quick. Trigger screen. So if we do this trade here, either Thursday or Friday, right? If we do this upside trade right here, right? Whether this takes, even if that takes on a Friday, right? The next move, right, is 660. So there's a chance here, even below it, right? There's a chance here that you could get out of that. This is your hourly trigger. Want to see it right here? Now, there's a chance on Monday you could, possibly. If not, though, we're gonna crank. Not crank, but probably grind and then crank. So, you know, I just take it easy here. If it was me. Anyways, that's what I'm leaving with. Oops, sorry about that. This is what I'm leaving with today. Market's still holding up. Be careful of the super ramp into Thursday, Friday. Your next chance for a roll, to me at least, is probably, depending on where we are, Friday open or over the weekend for more downside. And then we'd wake up on Monday and Tuesday and be like, yeah, we're going to take this down or we're going to take it up.
Release mechanism.
So in my view, the way is higher into Thursday, Friday. 2 targets. First target is going to be just a new all-time high. And then the next one will be a 664. Let's go do it right here. We're not going to go crazy. We'll go right there. We're not going to go. We'll bring it in a little bit. You guys will be like, oh my God, it's 666 right now. We'll do it just like that.
Moody.
There's the prior. We'll bring this in a little bit. We'll freak everybody out.
Highlights extraordinary potential of AI business.
So right here,
are substantial.
New all-time high on Friday or Thursday. Thursday or Friday, new all-time high. And then we'll fade this down to 660 into Friday or Monday and see where we land on Tuesday, Monday, Tuesday. Even Friday close will matter too. Be afraid of this right here, man. Like, I'm going to be super afraid of like this one and then that one right there. You want to know, I'm like really afraid of that one. And then we'll talk about this next week. Talk about your potential 660 and see if it bounces or not, or if it goes sideways, or if it rolls. I think it's going to be a sideways correction, to be honest with you, at this point. If anything changes, I'll let you know. I was going to do this in a private stream, but yeah, we'll do it on a public stream. There. So you got the, what is this right here? Thursday night? What is this? No, 9 a.m., 10 a.m.? Yeah, 10 a.m., sell it down. 2 p.m., ramp the fuck out of it. Back down again, back up again, into the bell. Something like that. 1, 2, 3, 4, 5. This could be big. Kind of already did it, didn't you? 1, 2, 3, 4, 5. We draw it like this. 2, 3, 4, 5. That'd be cleaner. Shit, did I do that wrong? How's that? 1, 2, 3, 4, 5. Right there. I got that right. Right there. There it is. There's going to be a bump in the road here, but it's going to be more like this. Down and then up. Shit, you could just have a 1, 2, 3, and then 1, 2, 3, 4, 5. Let me check this really quick. Yep, you can go all the way down here, right here. All the way down there. And we'll go south side under here.
House China panel chair says concerned about TikTok deal. House China panel chair Moonanar says we are concerned about ongoing reliance on ByteDance.
That's a 1 sigma weekly move right there, too. It's a 1 sigma weekly move. So we're not even going outside the range right now. We're not even being really bullish here. Okay, there it goes. Right there. That's it right there. I posted it for you inside the Discord. Did you guys get the... Oh, wait a minute. Wait a minute. Wait a minute. I did it wrong. Hold on. Hold on here, guys. I did it wrong. Hold on. So the dotted lines are places to add you should have already been adding. So the dotted lines are for adding places to add. So if you see a dotted line, it means we don't have to go that deep. If you see a solid lines, it means you add there. And I even wrote a note there that says bulls must stay above. That bulls must stay above applies today, tomorrow, and Friday close. It's invalid after Friday, but it's valid. It's valid if it breaks between now and then, like time or price. So, is there a chance we gap up? Fuck yes, there is. Fuck yes, there is. But this is the most likely scenario that I posted for you. Yes, fuck yeah, we can ramp up. We can ramp the fuck out of this. I prefer to buy dips, personally. I don't like chasing. I'm not a chaser. Told you guys that. I talked about shit all day long. Stay on the edges. I'm going to try to get some shit going. Buy doom. Sell highs. Buy doom. Sell highs. Buy doom. Sell highs to FOMO people. And always be looking in like pain. That's where I live, man. It's where all of us live in there. So you'll learn how to do that. I promise you. We'll teach you that. Any kind of pain, doom, any of that shit, we're cool cucumbers. We're like, oh, we know exactly where to go long. So,
according to Nikkei, Apple.
Yeah, you goddamn right, I like edging.
Total
okay.
shipments in 2020.
Thanks for joining us today. Please say something on Twitter. Call my name out or something. If you want me to follow you on Twitter, I will. I think there's some people I haven't followed yet that I need to. I think I did it, but I'm not positive. If you want me to follow you on Twitter, I'll put a little post on Twitter. You can reply there, and I'll try to follow you today. If you're joining us for the first time, you don't have any followers, you want somebody with like 30,000 followers, what is it, 25,000 followers? I don't fucking know. I'll follow you. Be like, I got 5 followers, Cap. Thanks for following me, man. I'll make a post right now. Want me to follow you? Question mark. Post it, and I'll pin it. I'll even get you. You guys want to see that I don't make we just did this today. I think I was the only guy on FinTwit saying up. So I'll put want me to follow you. You can see who follows me. You should see who follows me. They're all badasses. Like, legitimately. Like, I got badasses following me. You want me to follow you? No problemo. You're like one step away from knowing Tom Lee. I don't give a fuck about follows. So if you want me to follow you, I'll follow you. I hate follows, to be honest with you. Like, I'll follow you, but like I hate like the 30,000 shit. I like 1,000 followers is like perfect place. You can make money that way in the stock market. It's like the core group of traders that you trade with. You can find like a nice small group of traders that you trust. You can go to the guys that you trust. Say, what do you think we do here, man? And as a group, you can decide if this is the right or wrong decision. So, anyways, I posted it. I'll follow you on FinTwit. If you're like a young guy or some young gal, and I don't play any politics or nothing. Like, I don't care if you're MAGA. I don't care if you're Democrat, Republican. I don't give a fuck. I don't care if you're pagan. I don't care what you do. I only care about money in the stock market. If you care about that shit, I don't give a fuck what you say publicly. I'll follow. If you're into the stock market, that's what I'm into. And I don't care what you do anywhere else. You do whatever the fuck you want, wherever the fuck you want. Just as long as we're hanging out, we're talking stocks. You can do that with me. We can be friends for a long fucking time. And I hope to see you all tomorrow at 9:30. We do this show Monday through Friday. If you hate me, just be like, you're like, I got a trade I want to put on. And you like watch movies at night, or not movies, but like, the 45-minute shit on YouTube. You got your routine. You read this, you read that, you watch this. You're going to put a trade on, stop in and be like, hey, what's going on, guys? I want to do this. What do you guys think of this? And we'll talk to you guys. We're not assholes or nothing. We're not dickheads. We're like, you're fucking crazy. No. And I'll always tell you before, never after. You'll never, ever get shit from me afterwards. You'll never see me say like, oh, bro, it's so bad. I'll always be like, I'm long this, short that. I take L's. You can see me publicly do that. I'm not that fucking guy. So I hope to see you all tomorrow. If you join us for the first time, like, subscribe, please. I appreciate it. And